right? We have Karen, who's going to talk about digital franchise. And she is for hello, Michelle. Hello, Mylin. There are more people joining us, Mylin. Let me tell you what, so you can let them in. All right. Hello, welcome, welcome. Yep, people are loading in here. Thank you for joining us. Thank you for joining us. The Marcia, a call, the Chase Group, iPhone. Let us know who you are, where you're coming from. This right here, we're starting in Brampton. That's where I'm located, but it's GTA wide. And we had people from Texas presenting with us, Alberta, New Brunswick, right? So this is for everyone that's in real estate, everyone that's in real estate or involved in real estate, and not just involved in real estate, but have an interest in real estate, right? And businesses, and building businesses, and diversifying, right? And building multiple sources of income, right? Just like-minded people, for us to connect, and grow with each other, right? Because that's pretty much what we are. We're all connected. Everyone that's tuned into this channel right now is tuned in because we were set here to connect and to build and to grow with each other, right? And that's what this series is about. With investing for cash flow, and how is the real estate market, right? Because the real estate market right now is a market that's actually growing, and with that, there's so many different things that are happening in the industry, right? So if you are here, just send us, put a text in here, or even just say hi. You could unmute yourself. You could just show your face for a quick second, and say hi, and let us know that you're in the house. With here, we're really about connecting, and we feel that every single person that logs in is valuable, because that's how we're really going to get all the real information out. Everyone's sharing, their insight. If you have an impulse, that's impulses for you to contribute to the conversation, contribute to the discussion, right? And for us to continue to grow our mindsets and grow what we're doing. Okay, hello, Marcia, thank you. She's running in from Brampton. Marcia, thank you for joining us. Yeah, I seen a little wave too, so we got a camera, and we got a smile, and we got a smile from Marcia as well, so, thank you so much for joining us. iPhone there, I see you. Thank you as well. We're gonna just, give it a few minutes for, people to join us. Hello, everyone. Calling from Burlington. iPhone, what's your name? Give us a name over there so we can acknowledge you. But thanks for calling in from Burlington. All right, Chase Group. I see the Chase Group. Okay. Well, yeah. Okay. Stephen Miller. Miles calling from Brampton. Hey guys, like, even if right now it's introductory, if you want to unmute and you just want us to hear your voice, you want to bless us with that vibration, by all means, come say hi, say something to us. Michelle, you logged in from early. I never heard your voice yet, Michelle. How are you doing? Give us a hi over there.
Hi, I'm doing great. Thank you.
Okay, that's amazing. Thank you so much as well. Michelle is going to be giving us some insight. Look how nice she's dressed. She's going to show us how to dress nice, and then, so we look forward to that, and right now we just want to welcome everyone. Alvern, I see you're here for a next session, man. So you're a loyalist, he's the original. Yeah, unmute, man. Say hi to us, man.
Hi, everyone.
Hey, how's it going, man? How's it going?
Yeah, I'm here from Hanover, Ontario.
Hanover, okay, nice. That's amazing. So that, and every city that we hear, we're grateful for, because we are looking for this to grow and for everyone to get value. Alvern as well, man. We're gonna continue to connect, and that's another thing here. We want this to be, a virtual platform of networking, so that's why, as we're going through the sessions, if ask questions, or even give your input, after a speaker, wherever, or even while we have the discussion, put your information out there. The text areas here as well. right? And even in the text area, you could go and you could post your contact, post what you do, your link, your thing. What we're creating here is a platform. You know, it's a platform for us to collectively come together and be aware of new opportunities, be aware of, you know, who's out there, who could add value to what we're doing, right? And to give value, of course, to give value, right? So, you know, I'm grateful for everyone that is logged in here. We're gonna go on with the session. You know, as other people come in, you know, we welcome them as well. You know, and so first and foremost, you know, I want to introduce myself. My name is Richard Adokesi. And I want to actually, let me just take this on off. Okay, there we go. Yeah, so I'm I have a high interest in real estate. I'm a real estate broker, real estate agent, or so you call you, right? And being in real estate was really interesting because, you know, the more you're in it, the more information you're just, you know, is opening up to you, right? And the more information that you have in this industry, you know, it's gonna let's say 10 years become 1 year, you know, in terms of your advancement in this industry, right? And you know, it's just about getting the information, really, right? And you know, like as you get into knowing about capital raising and lending, and we have mortgage brokers that are on here. We have people that raise capital and, you know, can share insights on what they're doing. And there's people looking for partners, right? So that's why we're talking about platform, because if you're looking for partners, you're looking for all this. How do we know? The only way we know is by you being able to connect with those kind of people that have the ability and benefits of that. Even on our last session, you know, Eve, she talked about her first deal, right? And her very first deal, she didn't even put any of her own money in. She found an investor that was willing to invest 100%, right? But she found the actual deal. She found the actual investment, the property, and what they got to do, the numbers, what they got to expend, and how much they could sell it for, and this is what they're going to take, right? And there was a 50-50 split after it was sold, right? So there's so much information that you could get just by tuning into these sessions, right? So that's why we encourage you to invite, you know, your friends, your family, your, you know, anyone to come on board on this session, Invest for Cash Flow. You know, we're gonna go at it every month, right? Because every month there's new information, there's new news, there's economy's changing, right? So, you know, all these new factors, you know, what this is kind of like a way for you to do some technical analysis, right? For you to see, okay, how to analyze you when to go, right? When to make a move, when to shift. You know, you can forecast it, right? So that is the main thing what we're looking to do with this actual program. So I want to actually go into screen two. Let me go to screen two. Yeah. So first and foremost, I want to go into the map, right? Because the map, you know, is something that, you know, I formulated together. It's about accountability because, you know, in business, you know, we're all growing our business and we're all setting our goals, right? But with us setting our goals, you know, we have to have accountability. We have to hold ourselves accountable to what we say we're going to do, right? And by being connected with a network like this network that we're building, right? It equals your net worth. Opportunities are going to be exchanged, and we want them exchanged. We want everyone to connect and exchange value to each other so that we can continue to build. But as we do this, we got to pay attention, right? And paying attention is not just paying attention that something's on, but also paying attention with your third eye. You know, paying attention to, okay, why am I on this webinar? Right? It's not just for you to just tune in. You know, there's higher purpose. There's higher purpose to everything. And that's why we're asking to pay attention. You know, and that's why I thank the people who are continually coming on the session, because as we pay attention, then, you know, things are revealed to us, right? So that's what the map book's about. It's about setting your intention and paying attention, right? So, and, you know, with the map book, it's a program, but the book is the actual book that you're setting all your goals and your intentions in, right? And it's to be integrated into your daily essentials, right? So whether that's your wallet, your phone, your keys, you always have your purse, wherever, you always have them with you, right? So the map book's another tool for you to carry with you that's going to align you to your purpose, right? And we do this by staying plugged in, right? Going through your map book, it takes 5 minutes a day, 2 times a day, right? And you're pretty much holding all your intentions are in one place. And then MapBook Red, is what we have, and it's an accountability program that we have. It's a group. You just put MapBook Red. That means you read your MapBook. You set your intentions for the day, and at the night, MapBook Red, you're going to put your critical score, 7 score, right, into the program. So yes, it's accountability, but the MapBook was a book purposely made to be a physical book and not in your phone for a reason, right? Because MapBook needs your concentration and your focused attention for it to be effective, right? If you're switching back and forth throughout different apps using a program, your mind can be scattered, right? And the principles in a book, they work efficient when you're actually putting your time on the focus on what you're doing, right? By using a MapBook, it allows you to put all your energy and focus into yourself for the time being, right? This practice is so powerful as will speed up the rate that your desires come to your life, right? You're setting your intentions, you're sticking to your intentions, and they have focus and they're not a distraction that's in your phone. So it's kind of like you're unplugging, you're plugging back in, right? And another reason why MapBook's a physical book is to encourage you to handwrite, right? There are so many positive factors, that we're not consciously aware of by frequent handwriting. Handwriting is an effective way to stimulate your mind, brain, and your nerves, right? Handwriting is helpful for your precision, cognitive thinking, process, and memory. It improves learning and ignite new ideas, right? This is why it's so important that we read the MapBook daily. This program, is implemented by all, all the books that you read, about your subconscious mind, right? And the key thing is that you want to plug in your subconscious mind in the daytime and at night, right? Before you sleep, because what you're doing is your subconscious mind is actually activating while you're in your subconscious state, right? So there's so many things that are going on in this MapBook, and we have a 30-day accountability program where you have 30 days to plug in. So you're plugging MapBook Red within our accountability program, shows that you are actually working on your goals, your intentions, right? And after 30 days, if you're not plugged in, then you're removed from the group. So we're looking for people who are really focused, that really looking for high accountability, right, to be on the program, right? We're gonna, Mylene put the post there for anyone that wants the 30-minute consultation for that. So it's just a 30-minute run through. The website looks like this, right? And we have the mind map. So it's your mind. We kind of want you to extract your mind, right? What's in your head, what your goals are, for this year, for the next year, for the next 5 years, 10 years, and even going down to the day, right? But this program, this session, is a 30-minute session. You click over here, a calendar is going to pop up, schedule a time, right? And then with that time, we're going to have a Zoom session, let's go in detail, what it is that, your goals are, and, we're going to actually make those goals happen, and, that's pretty much a MapBook program. I love giving a briefing on that before each session, right? Because this program, everyone that's enrolled in the program is getting extreme value. Have you ever been in a day where, the day finishes like, I feel like I could have done more today, Like if you ever feel like that, then this is a program of fulfillment. It will fulfill you with that, because it really gets to maximize, all the intentions that you set. But yes, thank you so much. Now I want to get into it, into the actual, session. That was a part of it, of course, right? And the link is there as well for the MapBook, but we want to get into our speakers, right? As you know, invest for cash flow. Invest for cash flow is something where, you're putting in, right? You're putting in and you're getting a return, right? And when speaking with our next guest, she was, just going so in detail about wardrobe, about how you're dressing and the kind of clients that she has, high net worth clients, and they want to focus on their work. They want to focus on maximizing their results, right? And she's the one that gets them dressed, So I want to actually welcome Michelle LeBlanc. Michelle, welcome. Thank you for joining us on here on the Invest for Cash Flow session. Yes, are you here with us?
Yes, thank you.
Okay, thank you. So Michelle, I want us to go in because we were talking briefly, but first and foremost, please, if you don't mind, just telling us who you are, a little bit about your story and how you came to doing what you do.
Yeah, thank you, Richard. So my name is Michelle LeBlanc. I'm the owner of a wardrobe consulting company based out of Ottawa. We rebranded to OH Style, but the original name is Outer Health, and that's where you can find me on Instagram or online. And basically, I started my career a long time ago as a hairstylist. And, I'm a very observant person. So I always noticed how when people would come in, and, I was an entrepreneur from the get-go. I had my own salon at 24, I had a couple employees. And I always noticed that, like, people would talk about their problems in my chair and they would talk about whatever. However, if they liked the way they looked, they would take that energy with them and they would take that, they would message me later being like, I felt so great today. Like, my hair looked great after it not looking so great, or if I let myself go. And then I would approach people differently. I would talk to more people. Like my day was better. So fast forward a little bit. I'm a creative person, but I'm also very, very intellectual and I love to learn. So I pursued a career in psychology. So I went to university for 7 years. I was doing masters. I was a candidate for a PhD. So I went really, really deep into it. However, for me, fashion and style was always something that was a part of who I was. Even as a hairstylist, I learned to be, it was a gift, but it was also, I really learned how to differentiate very, very subtle tones between, for people so that they would look their best and I would do the best, coloring and whatnot, and the shape for their head and for everything. So it's something that came very easily to me. Anyway, fast forward, even in psychology school, and then I lived in Spain for a little bit where I did some of my studies. And everywhere I went, people would ask me to dress them. And I never really, like, it never really clued in that this could be a career. Even some of my, my hair clients, they'd be like, okay, my hair looks amazing. Now what do I wear for this event or this event? And I was always more excited to put together their outfit than even doing their hair. I was very passionate about my hair career, but I knew it wasn't for the long run. I knew it wasn't forever. Anyway, moved back from Spain. I found a couple jobs in Ottawa. I'm from Moncton, New Brunswick originally, where I lived, for a lot of my years. Then I was working in psychology and counseling. Then I got, not that I got bored working in counseling, but I kind of did a little bit because I was always an entrepreneur. So I missed the business side of things. I loved helping people, but I wasn't getting the hustle. And if you're a natural born entrepreneur like me, you know exactly, just working for someone else and not having a business aspect in your life, you go to bed every single night and you know something's missing. So fast forward a little bit more, I worked, I got scouted by a recruitment agency and they were like, you know what, we don't want to place you, we want you to work for us. Then pandemic happened, they laid off a bunch of people. I had already been dressing, again, people on the side, people would reach out to me and be like, hey, can you do this? So I thought, you know what, this is my dream. This is my passion. This is what I see myself doing forever. So I will educate myself in this field. I took my training from LA. I could do everything remotely. I connected with the best in the industry, all the celebrity stylists, all these people. I trained with them. I even worked in film and TV myself with a lot of, Canadian and American celebrities, people from all over, just to work at a very, very high level. Because then your work is being seen all over the world. It will be criticized, so you're really going to push yourself. So that to me was perfect to really get myself out there and see that this was a talent that I really had, and I always wanted to push myself to do it better and further. And I also worked with a personal styling team with designer at Nordstrom for a little bit. So I did all of that until I had enough clients to just work one-on-one with people. It's all fun and fancy to work with celebrities, but at the end of the day, I wanted to help motivated professionals like the people who have joined here today. For me, there's nothing more there's nothing more valuable and satisfying than help an ambitious professional set themselves apart or be more comfortable on stage, or just not liking anything in their wardrobe. And then after working with me, we find things that work really well for them. And again, they just walk different, they approach more people, and their job becomes a bit easier because, and I work with a lot of physicians as well. So imagine you're a doctor, you get sent to Seattle. That's a place where they have conferences a lot, and you have all this knowledge and all these wonderful things that you want to share with the people in your field, but you're concerned about your outfit. You're concerned that things aren't fitting well, that they don't go well together, that the colors aren't going to make you look really good. That's not what you should be focusing on that day. So that's what I do. I take that pain away, that overwhelm away from my working professionals. I figure it out for them. I can do outfit planning. I can do whatever, so that they can focus on being their best selves and deliver the material that they're so passionate and educated about, to help, the rest of the world. So in a weird turn of events, I feel like I'm helping a lot more people now, and on a deeper level than when I was pursuing my career in psychology. So yeah, that's me. That's what I do. I'm obsessed with my job. I'm obsessed with always finding better, bigger things, just to serve people the best way that I can. I am based out of Ottawa, but I do work with people all over the world. I was set up, to serve my clients virtually from the get-go, even before the pandemic. So that's never been an issue. And yeah, I'm happy to be here today. And I'm sure if anyone has questions or Richard wants to look into it further, this is who I am. That's what I do.
Okay, that's amazing. That's amazing. So yeah, you definitely have an extensive background, right? So yeah, get into it. Like, right now, like you deal with people of our kind. Like, what are things that that we like people have to look out for? Like, look to, like, what are some of the details that you pay attention to that people should be paying attention to when selecting a wardrobe or whatever the case may be?
Yeah, and that's a great question. There's been an enormous global shift since the pandemic. Everyone went from regular workwear and things that were more structured to people working in their sweats from their home. And now people are very, very confused, because it's like, what do we do? Do we go back to the original? Is it okay? Because there's more leniency, there's more work from home. And the biggest problem that I've seen, and people don't always know that this is a problem, but these are the things that I can bring to their attention, is that they will wear things that are a bit more comfortable, which there's nothing wrong with that, but it's the materials. So if you buy sometimes your dress pants from Costco or something like that, which is it's almost a jogger, it's almost a work pant, it's almost a dress pant or a shirt, or if Lululemon makes something a little bit more work appropriate, sometimes it can work, but sometimes it still kind of looks like you're in your sweats. And people don't know what they're looking at, but they know something's not right. And it'll downgrade your entire appearance. And whether we like it or not, people will make a judgment on the way you present yourself. So if you're talking on the stage, if you're, talking to a wide variety of people, you should look like you are well put together. You should look like you're in your sweatpants. I mean, if that's your job, if you're a personal trainer, sure. But sometimes we've let go of some of the quality to accommodate the new lifestyle. And there's still a very big disconnect that it's, that, like they say, the devil's in the details. So people see that the details aren't quite right, but they're like, oh, this outfit doesn't really look put together. And I'm not sure why. And as we know, when we like what we see, it fosters trust. So let's say, Richard, you have the best knowledge in your industry, but you're wearing sweatpants and somebody comes in with something that fits better and looks better, even color-wise, that just really flatters who they are. You could have the exact same resume with the exact same, level of education, and they're probably going to buy something from the other guy just because there's a difference that's not always noticeable to the eye, but it's something in their subconscious that tells us, yeah, maybe this person, we can't trust them as much because they didn't put that effort. They're not proud of what they're showing. They're not proud to show up in a professional way, like the other guy. It's kind of silly, but it's still in the world that we work in, and it's still how our minds are wired.
Wow. Yeah. So I like how you're talking about like you're relating clothing to kind of like their mindset. That's kind of how you were kind of relating the two. Expand on that a little bit.
Yeah, because it's a very simple motto, but from the get-go with the company that's been open for 5 years, it's look good, feel good, right? So even if you're always feeling in like a kind of whatever mood and you're just always in your sweats, well, you're gonna act like that and you're just gonna keep, not operating at your full potential. But when you put on a garment that you love, or when you look into your wardrobe and you love what you see and you can't wait to wear it and you're excited and you can't wait to go out into the world, this gives you a different mindset and a different type of energy. And I've seen that this relates to also people who are maybe in a middle management position and get promoted to CEO or in a C-suite role. And I've seen this a lot because sometimes you get the promotion or you're an entrepreneur and now you've stepped up to your level. You have a bigger network or you're going to networking events. So you have like, again, high ticket clients and you're kind of intimidated or unsure because you don't feel on their level because and it's not about just having expensive clothing. It's really about things that make you feel good and make you look put together. Yeah, so if you're not, once you step into clothing that makes you feel like $1,000,000, it's a lot easier to speak to those high net worth individuals. It's easier to operate at that level as well. You don't feel like as much of an imposter because imagine you're in a conference room and you don't like what you're wearing, you feel like it's a little meh, and everyone else is wearing a nice suit that they love and they look super confident in, and it just drapes really well on their body. You're going to feel like you don't belong there. You could have a lot less education and experience. If you show up at the same level as them, you're going to speak to them like you belong there. It's really, it is a mindset thing, and it's to trick your own mind as well. But again, it is what it is, right?
Wow. Wow. That's deep. That's deep. Yeah. So right now, I know when I spoke to you before, you were saying that I think you said 35% of your clients are male and like 65 are female, or you give me the stat like.
Yep, that's absolutely right. I've had still quite a good number of men because sometimes men either, their girlfriend or their wife dresses them, or they don't really know that it's important. But in the last year and a half, I've had a lot more men because now we're doing a lot of presentations, we're on Zoom and things like that. And even people in the IT sector, because they're usually the brains behind the operations and they used to be hiding behind the operations. And now they are required to speak to people and share their skill or train other people. And if they've been just wearing a t-shirt and sweatpants since university, again, it's that gap, right? It's like I'm being put into a role where I'm required to speak my mind and deliver my knowledge, but I look like a college student or I look like I don't belong there because I've never put in a lot of time in my appearance or in kind of even just checking to make sure that things kind of make sense when I wear them, or if it's like, if it's professional for the environment. So men are really showing up more in this sense because women have shown up more in the past. So men are like, okay, it's my turn. Like I can be there too. And also, yeah, like anyone who's in the public sphere. And I have a lot of realtors and a lot of people in the real estate space because there's a lot of you. There's a lot of you. There's a lot of real estate investors. I'm in that space myself as well. But you want to set yourself apart. You want to look like you have, pardon me, your shit together. If you don't dress the part, why would people give you $1 million? That's, that's my question. So yes, men are finally, men deserve to look good. They have to, they deserve to have the right colors for them and things that they can be excited about. It's not just, fashion is not only for women, but men are finding the need in this space as well. And the men who are single and they're looking to meet somebody. I've had countless men who were like, you know what, Michelle, I'm a nice guy. I have a great job. I make great income, and the women don't look at me. And I swear, after men are the easiest. So after like a session or two with me, a couple hours, women pay attention. It's all in the details. It's in the beard. It's in the haircut. It's in, just like having a nice shirt on, a clean look. You look more approachable, and women will pay attention. So yeah.
Oh, that's amazing. So going to the women now. Going to the women.
So for the women, again, it's a competitive field out there. A lot of women are getting into these C-suite, roles as well, and women are very hard on themselves. And our bodies change quicker than male bodies. We have, women that were on maternity leave, that were laid off, that have gained weight or lost weight or any type of body transformation. And now, post-pandemic specifically, they don't feel like their wardrobe represents them. Either the shapes don't fit like they used to, or again, completely different figure, or they've never really learned their colors, or they feel kind of lost in their space. And online doesn't help, right? Because if we go on Instagram, if we go on Facebook, we get bombarded by a million new brands a day. And people don't know which ones to trust, which ones to go for. So I help a lot of clients kind of filter through that as well. And I recommend those that have been tried, tested, and true by myself and my other clients, that I'm like, wow, this is a good, this fits really well. This one's a good quality. This one's really good for the price. This one, it helps people to make better decisions as well. But yeah, women have, we're always being told that this is not enough for your butt's too big or not big enough or whatever. And we get into our heads. So to have an expert come in and really show you the most flattering cuts, the most flattering colors, and the things that you can really glow as a professional. It is a game changer. Yeah.
Wow. So because you really go deep into like the fabrics and the colors. Can you go more in detail? Like why are these important? Like and what is it, like you wear certain kinds and certain times? Like, go deep into that.
Yeah, exactly. As someone who has sustainability as a high value in the list of company values, I myself like to promote natural materials and natural fibers, because it has been, proven through thousands and thousands of years that these things are made to sit on your body. They're made to sit well. They breathe better. They stay fresh better, and they have more of a longevity in your closet as well. Nowadays, we are again bombarded with about 50 different grades of polyester. So when you see polyester, it's not just polyester, it's polyester from A to Z or whatever. So some of them are processed in a way that is better, and some of them are processed with the cheapest, most harmful chemicals on earth. Moisture wicking things like that. There's a lot of new technologies, and some, okay, sure, they might work, but it's really important to spend some time like knowing what works in different climates as well, because I live in Ottawa. We have like four seasons in one day, but if you do travel the world, it's nice to know what will crease, what won't crease. So I offer a lot of education when it comes to that as well. Because for me, it's a mindset thing and it's a lifestyle choice, but it's like a whole food diet. Real things are better for you than things that are ultra processed. Kind of the same thing when it comes to clothing. You'll have much better longevity in a natural fiber than something that might just fall apart very quickly. And then you end up saving and having nicer items in your wardrobe as well, that breathe better and that just perform better in the long run too. And they always look better. People are always confused. They're like, Michelle, you wear you wear wool in the summer sometimes. If it's a very, very fine wool, like I have a suit made out of Vita de Barberi, it's a very, very nice virgin wool from Italy. And that's my summer suit. But I can wear it late into the fall as well, because wool is very intelligent. It will act nicely and cooling a little bit in the summer, and it will act more like like insulation in the winter. So your natural fabrics are more intelligent than the new, the new technologies of fabric as well.
Wow. And then the colors, go about the colors, because my color is green. I love green, right? And look, right, coincidence, you're wearing green. You look lovely, by the way. So green,
Thank you.
like, in terms of colors, right? Like go into that, because I know they obviously have connections to who we are. I know about the different chakras and the solar plexus, and like the colors matter. So, but I want to know from your end on a fashion sense, like go into the colors.
Absolutely. I know a bit less about the spiritual side of it, although I know that red is a very powerful color. That's why, our billionaire Canadian Kevin O'Leary, he's always wearing like red, and he's got like 2 red watches, and it's a very powerful color for him. But in terms of color consultations, again, having a background as a hairstylist, I am a master color theorist of over 15 years. And for me, it's colors that suit your skin tone. So we have 4 different quadrants, from autumn, winter, summer, spring. And we always fall, and we all have 2 parents, right? And they can look very different, or even be of like a different background. So we're not going to fit in one box always, because nobody's a canvas. We're humans with a lot of different, backgrounds and grandparents and whatever. So it's important to find your dominant quadrant. Then you kind of see, when you're shopping, which colors to go for, and things that are more flattering to your skin. I love doing the color exercise to just, it's drapes, and you put it and you see someone's face light up, and or you see it kind of wash out and they look a little bit sick. So that's important as well, in the sense when you're showing up on Zoom, like people like, wow, they look very, vivacious and alive and vibrant. Like that's also something that's very attractive to maybe an investor or something like that, because if you bring life and positive notes to their day, they're going to remember you a little bit longer. And if you wear colors that flatter you, you just look like, the whole picture, like what you're doing. But you're right, Richard, there's the chakras, and there's different colors that reflect on different, blue can be very calming. Green, I love green myself. And there's so many different greens as well. So I'm sure you can wear, maybe like 5 or 10 different greens, but there's some greens that might make you look sick a little bit. But when you find the right shade for you, again, you show up, you feel confident, it brightens up your smile, your skin, your face, everything. And green is a money color, so we do love it.
Yeah, for sure. That's amazing, Michelle. Thank you so much. But Michelle, I want you to actually, because this event's called Invest for Cash Flow, right? And we're like, you're talking about investing, but this is a different kind of investing, like and a different kind of return. Right. So I want you to really go in and, like, summarize to our guests, like, why is what you do so important for this kind of event?
Yeah, thank you for that. And I'll quote one of my clients that I had out of town yesterday. And she was like, she's a very, very successful entrepreneur. And she said, you know what, Michelle? She said, she's like, I love the name of your company, first of all. It was Outer Health. And she's like, I love that whole concept, because for years and years, I've invested in my, my inner health, the inner, and, you work on yourself, you're always working on yourself. But when you start investing on your outer health, people see that very quickly as well. And this is not a band-aid. This is not to say that you shouldn't work on your, on what's going on inside, but you want the outside to reflect on the inside. So when you invest and you're like, and you do things with intention, when you go shopping, either you've had guidance from a professional, or you saw it, you've asked the questions, and I'm always good if you guys want to ask me questions. I mean, within respect. You know, I'm always good to guide you a little bit to tell you which direction you should be going for. Because once you start investing in yourself, that's attractive. People want to be around you. People like your energy. You like your own energy. The energy that you're putting out into the world, it matters, and it changes your day, and it changes who you attract as well, because you're bringing yourself on a different level. So it's definitely an investment in yourself. And when you're investing in, you know, let's say a nice leather shoe instead of a plastic one, you're still investing in longevity, longevity, and, you know, like something that'll last you longer. And those details are noticeable and they do matter. So it is absolutely an investment to look into your wardrobe and to do it with intention. Instead of just going to the mall and buying anything, you take a step back and you're like, okay, what works for me? What's good? Like, your clothes should do more than just keeping you from being naked. They should be working for you. They should make you look good. They should make you feel good. And they should make you, you know, ready for your day, that you don't have to question that aspect. So it's definitely an investment.
Wow, thank you so much. That's amazing. Guys, the floor is open. There's any questions for Michelle? Yeah, she's been okay. We got a hand raised. We got a hand raised, Maxine. Hey, Maxine, go ahead. You could unmute yourself and ask your question.
Hi, Michelle. Can you hear me?
Yes.
Okay. Hi, Michelle. Thanks for your insights. I'm a little bit of a fashionista. I love clothes. I love to, you know, dress up, go out, all that kind of stuff. But what I'm looking for in this business world, especially if you're looking at it as a way for you to invest in yourself and, you know, be an investment, what is too much, rather than just, you know, sometimes you may want to, some people go over the top. I'm just trying to say, like, what is within the norms where people will still look at you as though you're a professional, but you're still being true to yourself, your authenticity, right?
That's actually a really, really great question, because it's not something that comes up all the time. So I'm really glad that you asked. I mean, I like to take everything into context. I like to look at the big picture. I like to see where you're at in your career path, who your audience is, who you're speaking to, who you are, what's important to you, right? So let's say, Maxine, I go into your wardrobe and I see that you love color and you love, you know, certain things. Instead of, and I do this myself, but again, in context, when I go into the right places, you're not going to show up at an investor meeting looking like a piñata with like so many colors and so much jewelry, because you don't want to distract from who you are. You want to tell a story. You want people to, again, to be like, oh, hi, wow, you look great. But it shouldn't be a costume. It should never feel like a costume, and it shouldn't be a distraction. So in the professional world, in the corporate world, I like to bring in color. Even if you have like a bright pink blazer that you love, then you do everything else a little bit more simple, so that it's not like we don't know where to look next. We're looking at you, but it's something that flatters and compliments, and it even feels good and authentic on your body. If you feel uncomfortable, or you feel like it's too bright, too loud, too something, then you're not going to be comfortable in the conversation. So those choices are very, very personal, because it does reflect on your inside. I'll take, you know, like musicians, for example. Some of them dress simply, let's say, you know, maybe like all in black or something, and that works for them. And then you'll have somebody like Lady Gaga, who showed up in the meat dress. She was very comfortable doing that. Was it insane? Yeah, sure. But it's how you wear it. You have to wear the clothing. You can absolutely not let the clothing wear you. And that's the difference. So that's when it's important to consult with a professional as well, so we can kind of see where you're at. I always like to meet people where they're at. And then we can assess, okay, how are you going to behave if you wear this? Is it going to be comfortable for you? Are you going to walk confidently? or are you going to shy away because it's a little bit too much? Does that make sense?
Yes, it does. Thanks so much, Michelle.
Of course.
Really good insights. Thank you.
Thank you.
Wow, thank you
Katie
so
or
much. Yeah,
Kathy?
yes.
Hi, Michelle. Love this topic. I just have a question for you regarding like everyday kind of brands that you would recommend. Like nothing over the top like Chanel and Gucci, but just like I'm a realtor and I struggle finding like decent pieces that, you can kind of wear, on a daily. So, decent quality, but not over the top.
Yeah, no, that's a great question. And it depends on your budget as well. I would always recommend, unless you find something really, really great, a great cut that just looks, better than it should for the price. I would say just to go maybe like $200 minimum for a blazer or something like that, and then to go up from there on budget. However, and your outerwear, like your jackets, your blazers, things like that, should be the more expensive, and then you can get away with like a $30 blouse because the outer is better, and people's eye is drawn to that. So I would say Banana Republic, Club Monaco is really good. If you want to go a little bit higher, you can go Judith and Charles. I would say in the, middle to up for your type of work, realtor, because sometimes you can find, a good blazer at H&M and it will look okay, but it may not perform the same and it may not fall as well on the body. Depends on your body type too, right? You might have a body type that is easier or harder to dress, where it depends. But I would say look at the price. I know that might sound funny, but it'll tell you a bit of the quality and who you're speaking to. So if you're, speaking to the middle management people and you wear that Banana Republic suit, which you'll pay like, maybe $500 for, it's still a very decent material. So I bring a lot of people there, but you don't want to go down too much from that. And one piece of advice that I will give you as well, if you're going to do blazers and jeans, and for the men as well, don't do anything that's too, like sometimes there's too much fade or there's almost a discoloration or too many holes, because that gives a very, very casual vibe. So if you're going to do blazers and jeans, stick with black or a dark denim. And then it still looks really well put together. And for the dark denim, really love Levi's. Levi's can serve a lot of different bodies and they don't have that, too much like patchy fading. And Page, which is a premium denim, and Fidelity. So Page, Fidelity, and Levi's are my go-tos. Levi's being more like around the $100, and then you can go up. American Eagle can be not bad, but you have to be, which is surprising because we're adults, but they've definitely stepped up their game. But you have to be careful with them because you might find things that look a little bit less put together. So it has to stay in like the darker or the very solid color category for it to remain in that professional aspect.
Awesome. Thank you so much.
Of course.
Wow, thank you, Michelle LeBlanc. Please stick with us for the rest of the session. If you don't mind, please put in the chat. Let us know how do we reach you? If someone wants a consultation, how are they going to connect with you, right? And anything that you can plug in for the guests, because I'm sure there's going to be more questions and that people have that maybe they want to talk to on the ones. But if you can, please just post your thing. If we don't have the link, if we have it, we'll post it on my link. If we have it, please post it. But Michelle, thank you. Oh yes, there we go. Yes. But guys, just go over there to the website and you can connect with Michelle. Michelle, thank you so much. Monique said thank you. We're getting love in the chat as well.
Thank you so much.
Amazing. Guys, this is what it's about. Invest for cash flow. And people see the timeline, oh shoot, 6 to 9. That's a long session, but everyone's consistently staying on the session because we're here to make it information packed. We're here to give as much value as possible on the session. And we want for you to invite your guests, invite people that onto the next sessions. I see we have people coming back. Hey, Corey, I see you, Corey. We got to get you as a speaker next session too, And that's what it's about. Let's get the information out there. I see Monique is on here as well, Maxine, who asked the questions on our last session as well. And that's what this is. We want this to be monthly. Everyone's getting all the information. I love that Michelle had questions because when we first spoke, she talked about clothing. I'm like, yeah, definitely that fits in, right? That because and just like she's explaining it, most of her clients are in the professional industry. So our next guest, is just as powerful she's gonna blow us away from the information that she actually is sharing about digital franchising. I was actually introduced to this about 3 months ago, right? And I met her, I met the team, I met everyone, and the vibration is just on a next level. I really studying the brain and knowing about the hippocampus and the expansion of mind. When you're really around, people of an expanded mind, your mind grows as well, right? And I didn't know anything about digital franchising before, right? And from one time I came in and I'm seeing our next guest who's speaking, and how serious she's taking this business, and from the field that she came into, it's like, okay, like we really got to pay attention to what's going on. So I'm going to introduce Karen Patino. Karen, how are you? Thank you for joining us. I think you're muted there.
There we go. Yeah, I said I'm good. Thank you so much for having me.
Oh my gosh, so I'm so grateful, for you taking the time out to do this, because I see how busy you are. Always taking time, but you're always available as well, and I just want you to first off tell your story, let us know your background, who you are, and then you go into digital franchising and what made you come about it. But I just really want to know, your past, like, let us know who you are and what it is you do.
Yeah, so my background's in real estate. I've been in the lending world for about 9 years. My husband for a lot longer. He's been in the lending world for about 15 years. And we built a really successful mortgage business. And we'd been doing that for a long time. Eventually, we scaled, not our mortgage, well, we did scale our mortgage business a little bit, but we realized that we were really trading our time for money. Unfortunately, it's the reality of the situation. I think anybody in real estate can relate. You are only as good as your last deal, and every single month you have to reset. Every single year you have to reset, and your income is solely dependent on you. And the only really way that you can scale a real estate business or mortgage business is by building a team, right? But again, there's always obstacles that come along with that, because you build a team, you train people, and then you have to hope that they stay loyal to you and they don't leave, and it's inevitable, right? People want to grow, they want to do their own thing, right? So we eventually got into the Airbnb space, and over the last 8 years, we scaled our Airbnb business, and we sort of focused on luxury rental properties. So we did like cottages and Whistler properties and stuff like that. And again, we did really well with that. We still do it, but about 1.5 years ago, I came across 2 natural health products that changed my life. I was suffering with really, really severe anxiety. And I was at the point where I really wanted to go on medication for it, because it was just not getting any better. And I'm a really active person, I'm a fit person, but I was not doing well. And it had a lot to do with what I just talked about, which was all that we took on as entrepreneurs, and all that we took on in our business, which was it was all by us. We don't come from money, we don't come from mom and dad's money. Everything we did, we built, my husband and I, from scratch. So it obviously took a toll on me over a long period of time, and I had really, really severe anxiety, and I was introduced to these natural health products that I started taking them, and within about 3.5 weeks, my anxiety was completely gone. I felt the best that I ever felt in my life. My husband, he actually also had an amazing story with the products as well. He had really severe digestive issues, and within about 4 days, actually, his bloating started to go away. He suffered from really bad acid reflux. That completely went away. And naturally, when you find something that is good, you want to recommend it to the people you love. And so the products are actually manufactured, they're made for metabolic health. And so I had given them to my parents, and my dad had high blood pressure, high cholesterol, rheumatoid arthritis. And within 3 months, his blood work came back clean. My mother-in-law lost 42 pounds. And my mom had a thyroid condition that stabilized. And I realized, holy moly, like, we have something here that has the ability and the power to change people's lives. Because if you look at the world that we live in, the statistic is this: 88% of the population is metabolically unhealthy. 88% of people adults that have either high blood pressure, high cholesterol, visceral fat, type 2 diabetes, and high triglycerides. And it's a problem that's getting worse and worse. And so I found these products and I realized that they solved a big problem. A way bigger problem than, people looking for vacation homes, and a way bigger problem than, unfortunately, people buying houses, because I mean, there's no doubt about it, right? Our real estate market has slowed down. And so this I sort of pivoted, and it came at the perfect time. And now I'm helping people solve this huge problem, and we've scaled it into this franchise business that has provided a lot of cash flow for us. In a time where our mortgage business sort of started to, decline a little bit, right? And same thing with Airbnb, because now people are tighter with their money. They're not going to spend, $5,000 on a weekend or $10,000 on a week vacation home, which was our market, right? So it really not only helped us in a time where our business sort of slowed down, but we created this whole other business that we didn't have an intention to create, but because of how big the problem was, we were able to scale a business from it.
Wow.
That was a long background, but that's my background.
Yeah, no, but it's amazing. So now, like, you scaled the business, right? And one thing that caught my attention as well is the cash flow, right? Because right now, obviously, active income is active income, but like you said, it's transactional, right? So on each transaction, you make an income, so it's not really predictable, right? But cash flow is something predictable. That's why we encourage to invest in real estate in terms of a rental income, get cash flow, right? But then when the market rates change and the rates going up, can you pay more and you had the tenant paying less? Right now, there's a good amount of people who are actually paying out of pocket every month, right? And
I'm one of them.
Oh, so it's like, so right now, like, I wanted you to talk about that, like, the cash flow and and having multiple sources of income, and what is been able to do with you. You said you're one of them, so if you could just tell, like, the effect of that and how you're able to help maneuver with that.
Yeah, I mean, real estate was always my first passion, and I've been a real estate investor for a long time. Not knocking real estate, love real estate. But yeah, in these times, you realize it's an asset that's actually not meant for cash flow. It's an asset that's meant for long-term equity. Because realistically, it's very hard to cash flow on an asset like this when interest rates are so high, right? And even before, most people were not cash flowing that much, right? Like maybe like $300, $400, which is fine, but it's not an active residual income. It's amazing that you're cash flowing on your property, but it's not paying your bills, right? So I think real estate is something that is meant to be, and this is just my personal opinion, right? If you disagree, this is just my experience with it. I think unless you do something like Airbnb, which is why we did Airbnb, or you hold real estate for a really long time, it's hard to cash flow on it, especially right now, right? And so you have to figure out a way to do that. With this business, I was able to create cash flow because I don't have a lot of overhead. And so when you can minimize the overhead, then you can increase your cash flow, right? And I think with Airbnb, that was a big lesson, because I was buying these properties, great, but there's a mortgage to pay, you have property managers, you have to furnish it, there's damages all the time, right? And in a rental property, the tenant laws in Ontario are not very friendly, right? So I had a tenant not pay me for a whole year on a property, and it took a whole year to kick this tenant out, right? So this was just a whole change in perspective for me. I was like, whoa, there's something else other than, a real estate investment, right? And when I saw that you could scale this business with little overhead, but through the power of a product that really works, I was very intrigued.
Wow, that's serious. That's serious. So in terms of cash flow, are you able to expand on it? Like, how long have you been involved, and how, like, cash flow that you've been able to scale to?
Yeah. So essentially it's like this. Any business that is like a successful business has a duplication model to it, right? When we look at some of the most like successful like businesses, like let's look at Uber, okay? Uber does not own a single car. They don't own a single car, but they took over the taxi industry, and they are a billion-dollar company. Airbnb does not own a single house, but they are billionaires, right? They they literally almost collapsed the hotel industry, right? There's places like New York where you cannot Airbnb because it would affect the hotel industry that much, right? And so when we look at any business, you show me a business, I will show you a duplication model, right? And so the thing is, franchising is the key to wealth, right? You have to be able to franchise out or duplicate or scale your business to create cash flow for it, right? The thing is, in traditional business, that requires a lot of money, right? You have to invest money to make money, right? And so when we look at businesses like Uber, obviously that took money to start up, but Uber has a whole business operation that's not reliant on them. All the people who own cars operate their business and they pay them a commission of those rides, and Uber takes a cut of all those rides, and that's a franchise business, right? And so with the digital franchise, it's exactly what it is. I have a product that helps people with their metabolic health, helps people with diabetes, high blood pressure, blood sugar, cholesterol, obesity, right? Like we hear Ozempic. Ozempic is like one of the most successful pharmaceuticals in history because they solve this problem, right? But it hurts a lot of people, right? And so we have this natural product that solves this issue, and the business works like a franchise. And so how the franchise works is essentially you obviously can, through affiliate marketing, can sell the product, but also you can have people on your team who also sell the product. They get their commission and you also get a cut of the commission. And if you're in real estate, you understand that this is how real estate works, right? I'm a mortgage broker. My broker owner opens up an office and says, well, I'm not going to go out and, fund $1 billion worth of mortgages. I'm going to hire a bunch of agents who are going to get mortgages, and then I'm going to take a cut of all their sales. Same thing with real estate agents, right? You have a broker owner who opens up a brokerage and then hires a bunch of agents. They sell houses. He gets a cut or she gets a cut of all those sales. That's Royal LePage or Remax or whatever the case is. That's a franchise business, right? And so this business, this digital franchise, it's the exact same thing, except I don't have a brick and mortar location, but I have a product that's amazing, that's helping people solve this really big problem with the exact same model that operates at like a real estate brokerage, right? And so I can make cash flow because I don't manufacture the product. The manufacturer's, it's already manufactured. The studies have been done. Everything is already set in place. It's kind of plug and play, right? And so now my job is to do what I do best, which is be passionate about the product, which I am because it changed my life and my family's life. Show others how it can help them in their health. When they get the stories that they get from trying the product, then they're like, oh my gosh, I'm already recommending it to like 20 people. Is there a way to make money off this? Yes, there is. Let me show you how. And so I show people how to also scale the digital franchise, right? And it was the same thing in mortgages, right? People come and they're like, oh, you make so much money as a mortgage broker. Yeah, come get a license, come to my brokerage. I'll show you how to do the same thing, right? So it's a very similar concept, but with a product that solves a really big problem that no matter the economy, people are going to buy into because everybody wants help with their health. Everybody.
Mm-hmm. Yeah, no, thank you so much for expanding on that. Right, I want to just get a little bit into the numbers because, when people are hearing business, right, obviously it like real estate, the returns. Although, yeah, rental income you don't get much, but if you are to appreciate in value, you're gonna get a good piece of money, maybe 100 plus or whatever the case may be. Like a nice
Sure.
windfall of money, right? So, like in terms of it, for this thing, like. Because I see this as I already know this is multi-billion, right? But I just want you to just share it in terms of the scale of how this business is growing and why everyone really needs to pay attention to it.
I mean, why people need to pay attention to it is because we are shifting. Our world is shifting to a digital world, right? Businesses are online now. Everything is done in the online space. If you are not online, you are leaving money on the table, right? And so when you have a digital product or something that can be purchased like through a digital platform, you have the opportunity to scale a business not only where you are, but globally, right? And so, for example, for me, my business is not just in Canada, it's in 62 countries. So I have teams, I have businesses in other countries, but I've never stepped foot into those countries, right? And so why people need to pay attention is because that is the direction that our world is moving into. So the sooner you can do something that can get you into the online space, that can get your business in other parts of the world, then you can move along with that, right? We talk about AI and the prevalence of AI and how that's going to change our businesses even, right? And so I think the sooner we can hop on board with the idea of having a business online, then we'll keep up with the times, right? And then we'll be able to pivot with the times as well. Is that kind of your question? I don't know if I answered that properly.
it did. It answered. It did. It answered a good piece of it. But in terms of numbers, like what can people expect being in this business? Like what kind of?
Oh, like
Yeah.
what kind of money can you make?
Yeah, exactly.
Yeah. So I mean, listen, this is a vehicle, but it's not a lottery, right? And so I tell people that all the time, just like anything, it's going to take time, it's going to take work, right? I managed to scale my business to over 6 figures in a year. And you know, people starting out, they can easily expect maybe $2,000 a month, you know, extra, $3,000 a month extra, $5,000 a month extra. For all my people in real estate, I always tell them, you have the skills already, you have the network already, easily. Like in my first 6 months, I scaled this to about $10,000 a month passively every year. And now it's way more than that, right? So the potential is unlimited. And I'll tell you why, because in business, what stops you from when you reach the cap in your income is when you reach the inability to scale your business. And that often happens because of lack of capital, right? It happens because of lack of money, right? Even as a real estate agent, if you can pump out $100,000 worth of ads every single month, I guarantee your business will grow, right? But who has the money to do that? You don't always have the money to do that, right? And so a lot of the times in business, the income is capped at your ability to invest money into the business. With this business, there is no cost to growing. There's no cost to the scaling. Yes, you have to invest your time. It's like anything else. You have to put in work, but there is no overhead, and therefore I can scale unlimited, right? Because I can get the product into as many people's hands as possible. Like I said, 62 countries. And so, I mean, there's people that on my team that are making, you know, over $100,000 a month doing this, right? Now, how much anybody can expect to make, it depends on them. But I'll say something, we have the tools, we have the resources, we have the training, we have everything sort of set up to make sure that somebody who's plugged in and actually wants to do this can be successful. I'm nobody special. You know, I'm not anybody that, you know, is like some genius or anything like that. I saw an opportunity, and I saw somebody who had successfully scaled the business, and really that's all it takes to know that something is possible. It's that somebody else has done it. And so I saw that somebody else did it. I looked at that person. I was like, if you can do it, I can do it. And so we started the business like that, and it's grown into this massive thing. When I started it, nobody knew about it in Toronto. Nobody knew about it in the GTA. And now a lot of people know about it. A lot of people are more curious about it. A lot of people have questions about it. And our job right now is just sort of to bring awareness, educate people. And we're always looking to, you know, bring people onto this, because timing is everything. If you can get into something early before it sort of takes off, then you have a really big opportunity. Just like, you know, everybody who should have bought real estate back in like 2012 and they didn't.
Yeah, for sure. No, that's very insightful. Karen, I just want you to, before we get to questions, I just want you to talk about, like, because, you know, people are here from different professions, different things that they're doing, right? Like for this business, like, you know, for someone that, you know, say like their main focus is like, you know, say it's a real estate seminar, so they want to make sure they focus on real estate, and this, you know, they're not trying to add much to anything that's going to take much time. Like, can you talk about like the time requirement or whatever the case may be, you know, for like someone to see results in this business?
Yeah, I mean, I started part-time. I wasn't really doing it full-time at the beginning. I don't think this is something that, you know, when you sort of start like a side hustle, this turned into kind of my main hustle, but like I started as a side hustle. I didn't know what it was going to become. I started very part-time. So it's something that you do part-time. If it surpasses your income, why not go full-time, right? So I got to a point in my business where I scaled it up to a point where I was like, yep, I can do this full-time now, right? And I love it. I love helping people. I love helping people with their health, first of all. That's so rewarding. Like I have people that are off medication, that have PCOS reversals, so much stuff, because metabolic health is huge. It's huge, right? So not only I'm getting the reward from that, right, but also I'm helping people with financially, right? Because if somebody came up to me before and said, you know, Karen, I see that you and your husband, you know, have built this Airbnb thing, and like, how did you guys do that? I would love to show you, but, you know, are you willing to come up with the capital the same way that we did? Are you willing to take the risk that we did to do it, right? Not everybody is the same. The barrier to entry is harder, right? But with something like this, not only am I helping people with their health, but the barrier to entry is a lot lower, right? If you're willing to put in the sweat equity, then anybody could do this. That's
amazing. That's amazing. Guys, if there's any questions, please put your hand up. Karen, thank you so much for going in detail. You know, before we get to any questions, any final things that that you could say right now, just in general? You know, it's an Invest for Cash Flow event. You know, we invited you, so of course you're in alignment with the actual session. But so if you could, you know, give us any final things that's related to our session.
Like what I don't, what do you mean?
Yeah, like invest for cash flow, like because right now, obviously what it's an investment for cash flow, right? What you
Yeah.
have, what you're sharing with us, right? But that's what I'm saying. Just in general for the guests, kind of like a summary, that you could give, for this.
Yeah, listen, this is the thing that I've always led by, and it's like if you're not happy with what you're getting, take a look at what you're giving, right? And so I think when it comes to like investing or doing anything or a business or anything that you're doing, just ask yourself, am I adding value? And if I'm adding value, then you have something good, right? I think ultimately a lot of us sometimes forget we're sort of in a rat race and we're, constantly in survival mode, right? And you forget that business is about solving problems. So just make sure that whatever you're doing, you're solving a problem and you're adding value. And if you can do that, then you have something powerful in your hands. That's it.
Wow, amazing. Marcia Cole wrote here, your wealth is your health. And that's amazing.
Yeah, absolutely.
Yeah. We have a question, Maxine, go ahead.
Hi, I had a question. So is it that you are only in marketing one specific product, or do you recommend people diversify with this whole digital marketing era?
So my specific business is a system, and it's composed of 2 products, and it's a system that together helps people with fasting, portion control, gut health, blood sugar control, insulin level control, right? And so the system itself solves that problem. And so my business only markets that product specifically. I'm not like a health coach, right? So I don't like recommend people to like, hey, take this. Obviously I have my own, my own fitness stuff that I do. Like that's my world in terms of I'm very passionate about that stuff, but I don't recommend like supplement, strategies or anything like that. But I can tell you that this product is already clinically validated. There's double-blind placebo studies on it by Cleveland Clinic, #1 heart hospital in the world. Sydney University has done studies on it. We're in the American Diabetes Association journal. The roots go back to Rexall. So the product is rock solid, and it already solves a really big problem, which is metabolic health. And then once people sort of solve that problem, then, they can look into starting other supplements and doing that stuff. But my business is one product, because I find that when you're scaling something, it's easy, the simpler it is, the better, right? And so the system is easy to follow. It's not a meal replacement. It's not a calorie counting diet thing, right? It's something that you can add into your life very easily, and we scale the business through that one system.
Okay, thanks.
Karen, if you don't mind just expanding on the system, what is the system?
Yeah, sure. So the system is essentially, it's composed of 2 things. So the first product, it's a system, it's sold as a pack. The whole system itself, it costs about $6 a day, so about a cup of coffee a day. And what it comes with is the first part of the system is a yerba mate extract. And yerba mate is a really amazing plant. It grows in Argentina. It's a tea. But what the yerba mate extract that we have, it's like the highest quality that you can get. And so what it does is you kick caffeine. Like I'm Colombian, been drinking caffeine my entire life. I don't really drink coffee that much anymore. So I have my yerba mate extract that keeps my mood up, my energy, brain fog gone. And what it does, it actually suppresses your appetite for the time that you take it. And so what happens is you're taking that in the morning so that you can intermittent fast consistently. So now people are intermittent fasting every single day without willpower, without discipline, because it naturally is suppressing your appetite just for that morning period. Whenever it's time to eat, you take the second product, which is Balance, and it's a prebiotic fiber blend. And it has multiple sources of fiber, minerals, nutrients, and it has 7 sources of fiber. So the thing is, most people are fiber deficient. And so when you have that before your meal, it's actually controlling your blood sugar levels, because fiber does that, right? If you have like, a chocolate, but you have it with an orange, the impact on your blood sugar is going to be less than if you have the chocolate alone, right? And so the fiber helps to control blood sugar, but also fiber is really satiating, right? I always tell people, if I put a pizza in front of you, you could probably eat like 4 slices of that pizza, but if I give you 10 oranges, it's going to be really hard for you to eat all those 10 oranges, not because 10 oranges are less, calorie or more calories. They're probably the same amount of calories. It's because 10 oranges have a lot of fiber, right? And so you have that before your meal, and it helps control the portion that you're eating, right? And also helps improve your gut health at the same time. And so basically it's a system that incorporates fasting and blood sugar control, which is really important for metabolic health and gut health as well.
Wow. Thank you for sharing. We have another question. Alvern Martin.
Yes, my question is not directly related to digital franchise. You had mentioned that you're in the Airbnb space.
Mhm.
How are you managing that with the new Airbnb laws?
Right now, just kind of like pushing through until, you know, like anything happens. It takes a long time for sort of like bylaws to come in and stuff like that. You just have to work with it while you can, right? I bet, like there's a property that I sold off because the bylaws just got too aggressive and it was very hard for me to run my business. I think you just have to be very educated on where you purchase an Airbnb, because yeah, the laws are not getting very friendly towards it. And the properties that I already had set up, you know, I've kind of had to just like either, you know, get licenses and comply with the bylaws, or sometimes just continue to run my business because, you know, I have to make do for now, right? But ultimately, the Airbnb space is changing. So if you are looking to invest in a property for Airbnb, then yeah, it's very important you look at that stuff. I've already had my properties long before all this sort of started to happen. So it was something that I've kind of had to mitigate as I go along.
Thank you.
All right, guys. Thank you so much, Karen. We appreciate your time, you know, and your busy schedule, and very informative, very informative. You know, thank you everyone for asking the questions that you have to ask. You know, take a look at the link there on the side, posted by Mylin. You could get, if you want to have more meetings, one-on-ones, get to learn more about it, then make sure you register so that we can connect and let you know more about the digital franchise. You know, I'm a partner in the business as well. You know, personally for me, I've noticed my skin get better, more alert, energy's up. You know, I'm starting to see some shape of abs coming in, you know, so I get, you know, like I do notice the difference there for sure. It's an amazing product, you know, so thank you, Karen. Thank you for your time. We appreciate you.
My pleasure. Thank you to all of you for taking the time. And I'm just heading out, so I'm going to leave you guys. But I hope you have a great night. And Richard, thank you so much for inviting me. I really appreciate it.
Yeah, thank you. Amazing, guys. Invest for cash flow. You know, we have, you know, all different kinds of, just wait for you to open your mind up, you know, different opportunities. We know we have fashion, we have digital franchising, but now we want to get into this main discussion that we're going to have every session. And it's good that we have it every month because, you know, the economy's changing, the market's changing all the time. You know, there's all this different news that's going on, you know, different information, the market's always changing, right? So what it is how's the real estate market, right? It's no question mark. You know, how's the real estate market, right? Being a real estate professional as a realtor, you know, that's the number one question I get asked by all my clients. How is the real estate market, right? And it's the best question to ask, right? Because we see the real estate market, it has been a number one discussion, you know, for the past 10 years, right? And even more than that, but from COVID, you know, post-COVID, you know, the past 5 years have been a roller coaster, right? The prices have gone through the roof, right? And also they've been stabilizing. And now at the time where we're at, you know, it's at a time where, you know, we were all asking for lower rates for the, you know, for the Bank of Canada to decrease the rates. And, you know, I guess they finally listened, right? So they finally decreased the rates in Canada, right? And that's what we're pretty much, you know, this is the market now. So we gotta, you know, please everyone, we need everyone's participation because everyone's affected in the market in some kind of way, right? And you know, we need to know, hear from everyone, you know, so that we could get a good forecast on what to expect in the future, right? So looking at these trend markets, that's this Toronto real estate market, you know, this session's for all over. We see Zena here. Hi, Zena, how are you? She's coming in from Alberta as well, right?
Hi, Richard. Thank you for having me.
Thank you for joining us, right? And you know, so these are the stats. I just want to briefly just show these stats here in the GTA area, right? So it's saying in the month of July, you know, there's been an increase 5.9% in sales. You know, so about 7,883 sales, right? New listings have gone up, so there's been more listings on the market, right? For right now, in terms of the new listings that we have on market, is 23,089 new listings, right? The average price of the homes have gone down, right? Again, for another month. I know last month we checked and the prices have gone down. And then this month again, we're checking and the prices have gone down again, right? So it's good to see a month to month and we can see where everything's moving, but we're seeing, frequent decreases in the average pricing here in, the greater area of Toronto. So, and, we see the dollar value from last year to this year has gone up, but even though prices have gone down, we've gotten a little more sales, right? So the dollar volume has gone up, right? We're seeing more leased homes, and properties right now, right? So more people, what that data could be telling us, because we're seeing a 35% increase in lease. So there could be have more sales. A lot of people could be selling and renting, right? But this is just, my interpretation of this, and the floor is open. I don't know if anyone sees this differently, but right now, based on the current stats, that's something that I'm analyzing. Anyone else have anything to say about this?
Hey, Rich.
Yes, Corey.
I've been really marketing for real estate agents over the last, I would say 2.5 years. And I've kind of seen the trends go up and down, even when mortgage rates just started going up. It seems like there's a fear every time interest rate goes up, there's a fear in the market to where, okay, what's going to happen next? And I think what you're showing on the chart right now is that because interest rates are going down, people are having more confidence in the market. I know last time that we had a session that the government was they said that the government wasn't going to lower rates for the rest of the year, but they have no choice. Right? Rates are going to continue to come down because the economy is so bad. If you look at the Canadian market is all based on real estate. We don't have big corporations, top 1,000 corporations. So if the real estate market goes down here in Canada compared to the United States, Canada's done, right? So it was supposed to happen a lot sooner, but over the course of the next year, I'm not sure what the lowest rate's going to be, but it's going to continue to go down. And the chart also shows that, lease rates are going up because it's cheaper for me to lease than it is for me to buy, right? If I make $100,000 a year as a single person, I still can't buy a home, right? I might have, if it's my first home, I'll have incentives and stuff like that, but I would rather rent, right, and pay $3,000 for $1 million home on rent than I would have to pay $400,000 or $4,000 and move to Alberta, right? So those are the kind of, when I look at the trends, I see those trends happening all the time. And that's my little thing. I was gonna go into some marketing stuff, but like that's from being in the industry on the marketing side and knowing, how many people are searching for homes every single month. Within each city, you can see every single month when interest rates go up, there's a pause in the market for a month, and then the consumer gets more confident and then they start to buy. So as interest rates go down, the confidence in the market is going to start to go up because people pay attention to the news, right? And as an investor, right, if I buy something like a $2 million building in last year, the rents went all the way up, right? It went from $12,000 or $10,000 to $14,000. And now, like Karen was saying, you got to pay out of pocket, right? So as the interest rates go down, the confidence will be in the market. And I think it's one of the best times to like continue to market yourself as a real estate agent because it's going to continue to go up as the rates go down, and Canada has to put the rates down because our main source of income is real estate. And that's my little analysis over the last couple of years.
Say that was deep. And I feel it was spot on. You were saying you're going into the marketing side, but what are you seeing from that angle?
Well, what I see is a lot of companies are not utilizing Google and what people are searching for right now, right? Even last month or over the summer, I noticed that cottages were the hottest thing, right? As far as marketing dollars, right? And real estate agents need to understand that, you know, I know Karen was talking about, oh, if I don't have $100,000, I can't market, but that's not true, right? Like for me, if I do advertising for real estate agents, it's $10 a lead, right? And now I know a lot of people say I don't like to do advertising. It's because on the back end, they're not calling the numbers that come in within the first 5 minutes, right? That's the biggest thing. Like if I'm a real estate agent, I can get leads all day, every day, 24/7, doesn't matter. But am I going to put in the work to when someone fills in that form, am I going to call them in the first 5 minutes? Right? A lot of real estate agents don't understand if you don't call them in the first 5 minutes, there's 100 real estate agents willing to take their call. They're going to go on to the next one, right? A lot of real estate lost money, but Zillow continues to create billions every single year. And all they're doing is what real estates are supposed to do. Make a website, put ads on the website, make people come to the website, fill out the form, and call them in 5 minutes, right? Every single real estate agent can do that, right? So like when I hear like, okay, the marketing's slow, then I'll go over to the SEO channel because I can see behind everybody's site, right? I can look at their site and I can tell, okay, this is how much traffic is coming to their site. No wonder why you're not making any sales, right? You have to understand your conversion rates. You have to understand that only 1% on social media. This is why I tell people like social media is a second piece. And number two, you need to be able to hit a direct person every single time who's interested in your product or service, right? So I could spend $10, get to 2 or 3 leads because real estate leads are really easy. Everybody has to buy a house, and I could scale my business that way slowly over time. And if you get, let me break this down into numbers. So if I spend $20 a day, right? And you understand the conversion rates are $2%, that means you're going to get 50 to 60 leads. One of those are going to close within the first 2 months, right? You obviously need, to give people time to be able to buy the home and, do all your prospecting and go through all the things that you have to do. But month 2, month 3, there's $20,000 in your pocket from you just spending $600, right? And you doing the work to be able to call people. And then you can scale over and over at time. And as a real estate agent, once you get that 20 grand, you can continue to do it over and over and over again, right? But I see the reason why a lot of real estate agents are struggling in this market is because they're not putting in the marketing dollars to get to the right people. They're just posting online, going to a broad audience. And if you go to a broad audience, that means you're not hitting people with the exact problem, right? And Google shows you every single month, like I could show you right now, like I'll show you, let me just share my screen real quick. Sorry, guys. Sorry for the
Yeah, while he's doing that, Zena has something to say. Zena, real quick, go ahead.
Yeah, I just wanted to ask Corey, when he says $10 for a lead, are you only talking Google or are you also talking Facebook?
Both. Google and Facebook. Facebook is a little bit less expensive, but it's like $1-2, right? It's not like, and Google is more of, I'm searching for the problem, and then because I'm searching for the problem, I have a higher intent to be able to commit an action, right? When you're doing a Facebook ad, it's like, okay, I need to put on the hype, I need to do all these things, so I attract people, and then you have to do more qualifying. So in your when they opt into the form, you're supposed to ask more questions, so you see if they're serious, right? So if they're not serious, you're not going to fill out the form completely, and
they'll put fake information.
They'll put fake information. But if you ask enough questions, I say between 6 to 7 questions that they have to answer. If they're not filling out that form, you don't even bother, right? But if you ask some basic questions like name, phone number, email, you're going to get fake information all day. But if you ask more serious questions and get them to do the work on the front end, then on the back end, it will be easier. I know the lead is more expensive the more things you do, but there's ways to do that. Like, okay, put the lead page, and then after the lead page, ask more questions after the lead page, so the lead is inexpensive on the front end, and then going on the back end, it won't cost you anything more, right? Because you're going to get bad leads. If you had a store right now, you could even take the Apple store. How many people are in the Apple store every single day but don't buy? Right? It's a very few people who are going to, they'll look at it, they'll browse it, and then maybe they're not ready to buy right now, but in the future they're ready to buy. So you have to also think about that. Like, just because you put out an ad today doesn't mean someone's going to buy today. Maybe someone's just in a browsing mode, and that's where your emails and your
Nurturing comes in, yeah.
your drip comes in, right? So
Yep.
let me just go into a Google ad real quick. Right, so okay, so if I go into Google Ads and I go into Insights, clicked off, sorry. Appearance, notifications, tools. Sorry, they changed this up a little bit. Planning, keyword planner. So how the internet works, and a lot of people don't realize this, but the internet works off of what people are searching for, right? So if you don't know what people are searching for first, no matter what content you do, no matter how good it looks, if enough people are not searching for that word, you'll not get the attention that you need to be able to make sales, because you always have to remember any marketing content that you do only converts at 2 to 3%, right? So you need to be able to, anything action that you want, a lead that you want, a sale that you want, you have to know that I need to get to 50 people before one person buys. Right. Let me go to, we're in Canada, homes for sale. Sorry, guys. Homes for sale, Toronto. Canada. Sorry, guys, I'm just trying to get to the right. If anyone has any more questions about it, I'm just trying to get to the right Google.
Or you know what you do, because right now that's what I'm saying. Like, what you have going on is details, So post your link, let the people get in contact with you. You could go through a 1-2 private session with them or whatever. Let them know what's going on, because definitely I know what you're going in deep in the details, but what you shared is important. For people to understand that when you are advertising, you have to start actually know the amount that you're expected to pay, in order to convert, right? So that's and that's pretty much what you're saying, right? And the right keywords to put in.
Yeah, correct. You have to know what it takes to convert. Like, you have to know your numbers in business. And it doesn't matter what business you're in, whether you're in real estate or anything else, you have to know your numbers. If you don't understand how many people are searching for a word, if you don't understand, what words is going to get you the attention that people are going to buy, it's not going to work in any business, right? You have to be able to structure the way that you make the advertising and hit the right people at all times. If you're not doing that, you're wasting your advertising dollars and you're not going to get good results, right? So in this real estate space, even though you showed that chart, there's thousands of people looking and trying to buy homes. So the real point that I was trying to make is that, yes, we're going into a tough time, but a lot of people are not just real estate, a lot of people are not putting in the work and a little bit of money to be able to get to the right people, get the qualifying leads, call the leads, and be able to make the sale, because it's a numbers game. This is all a numbers game. And if before, like Richard knows this, if I have to run TV or a radio ad, I got to put out 16, 100,000, and that's not covering, you know, how I got to create the ad or everything like that. And I'm not able to, even if I'm on CP24, I'm not targeting, if I want to target Toronto, if I want to target Barrie, if I want to target, you know, a certain area, I can't just do that with TV or radio. Online, I can do that. And if I understand, even if I'm doing it organically, I understand what people are searching for, I'm going to get the traffic, right? Because that's how the internet works. And, you know, I understand that we're going through a hard time as far as real estate and interest rates are up, but in those times, you pump out more money, right? Just like Zillow went from, before the pandemic was 8 billion, now it's 12 billion. And they're doing the exact same thing and selling realtors leads for $150, $300, right? When you can do the same thing yourself, that $150, $300, if you put in yourself, you get a lot more leads, right, than what Zillow's going to give you. And they're doing the exact same thing, right? They're running keywords to different words. Once those keywords hit the top or they get enough traffic, then they do the SEO, right? Because in real estate, SEO takes a longer time because there's so much real estate agent. But if you pump out the ads and you take over that word stays on Google. Then you go after the next word. Then that word stays on Google, right? And it's a continuous thing. And then you're like, okay, I have so many leads. Then you start building your team. And then your team doesn't have to worry about getting leads because you already have the marketing to get them the leads and the tools to get them more and more house solds and sellings and listings and stuff like that. So that was the only point that I was trying to make today.
No, what you're making, you know, definitely what the point you're making is great. And, you know, of course, with in terms of the market is something that is not in our control, right? But then we could do the things that are within our control, right? And, you know, that's what you're explaining right now. You know, doing the things that, you know, is in our control. But we do have to pay attention to the market, see what's going on with the market, and analyze it, you know, right? It's really important. Like going over here to this chart, this right here is pretty much the policy interest rate and how it's been doing and what's been happening with it, you know, within the past, right? So we're looking over here, 2023, right? We were at 4.5, and then they, you know, they kept it steady. After in 06, that's June, they increased it, you know, 0.25, then they increased it again in the July, right? And then they kept that rate, right? That 5% for 1, 2, 3, 4, 5, 6, 7 months. Kept it at this 5%. And definitely, you know, just being in the industry and our other industry people are in here as well. And, you know, how have you been feeling it, right? Because it's been up here and it's been up. Now we're starting to see a decline. The past, you know, 2 months, it decreased it 0.25. We see over here, right? And then the next announcement is coming on September 4th, right? So, well, you know, what's your anticipation for the next rate interest rate, and then what have you been seeing during this time? You know, just in general, what, like Zena, you're from Alberta. What have you been seeing on your ends? And then even if you're on here and you own a home, or you're looking to buy a home or sell a home, you know, what have Kathy's in here as well? You know, if you don't mind sharing that, like based on, you know, the current state with these, you know, and the next announcement that's coming up, like what's your anticipation? If you don't mind sharing.
Of course, I don't mind sharing. So yesterday I was just reading, and that's a really funny tidbit I read yesterday. Bank of Canada is proposing 3 rate decreases till the end of this year. Wow. And that kind of threw me off track. I mean, it kind of surprised me because I'll go back a little bit and I'll just add 2022 and 2023 were tough for all real estate agents. I'm also a real estate agent. It was tough for me. But surprisingly, from 2023 July till 2024 right now, August, in I would say almost 9 months, I have doubled my sales.
Wow.
So not to say that I did more work. I'm just saying that during that time, even though the rates were, like you showed, they were steady for the 7 months, and then they started dipping. Despite that, I've seen that people who want to buy are still buying. They don't care about the rate. for me, it has been a lot of people who were in that boat where they were like, should I buy now or should I wait 2 months or 3 years or 1 month, or I missed the boat 5 years ago and all of that stuff. So they bought irrespective of the rate. So there is one category of those people. The second category of people that we've been selling to is out of town buyers. For Alberta, it's been people from BC and people from Toronto. Most of our people, most of the buyers, investors have been from BC, Vancouver, Victoria, all those would be Vancouver, Victoria areas, Burnaby. And then from Toronto, they've been mostly, I would say, Toronto, Markham, Hamilton, Mississauga, that region. And those guys have been pumping up prices for us. As a regular Albertan, our prices have gone up insanely. I was just looking at data before this meeting, and if I have the ability to share my screen, I would just quickly show you how it's changed for us, like as Calgarians in the past 2 years. We've gone up 30%.
Go ahead, share it.
Okay, I can share it. Just give me 1 second. I will look it up. Housing screen. Yeah, this one. Sure. Okay, so can you guys see this?
Yep.
So I was just looking at this right before this meeting actually, and if you look at it, the total pricing, like this is for the whole, it encompasses all the detached rows, semi-detached apartments.
What area
You'll
is
see
this?
right, sorry?
Which area?
This is for Alberta. It's Calgary
Okay,
Real Estate
nice.
Board, so it's Krebling, so that's our board. So
Nice.
this data is mostly for Calgary and area.
Okay,
So
good.
you'll see that the total gives the housing summary for all categories, and our median pricing from 2022 was 440. It's gone up all the way to 563 right now, and that's almost 28% up. And that's when the massive movement has happened. Just from last year, you'll see we've gone up 70,000, so from 493 to 563. And this is, again, encompassing all types of homes. Different categories have different percentage changes. So for example, detached, if I open it up, I will show it to you. It's almost 30%, more than 30, roughly 30. So for detached, from July 2022 to July 2024, we've gone up 26%, from 637 to 803. And these are starter homes. Like, these are not even mansions. These are like 1,700 square feet, single family, attached detached garage with, you know, like 3 bedrooms, 2.5 bathroom. Most of them are unfinished basements. This price point is usually for our brand new homes right now, which is very high for a regular Calgarian. And like somebody else was discussing, even 1,000, you cannot qualify for 800,000 right now. There needs to be add-ons, like more people need to be contributing, like the whole family. Rows in townhomes have been a little higher in percentage-wise. They're actually 32% up in 2 years. So from 356 all the way up to 470 and change. And our semi-detached have been similar. So everything is 25% and up, minimum. Wow. Which is like, on a $500,000 home, we're up 150 minimum. So semis have actually gone up by 34.5. So that's where we've seen the most massive growth. And one of the reasons why I feel is because of the price point. Because these were affordable for the masses. And now 680, 690, 670, 650 is usually doable for a family for 100K income, give or take. And with the rates being projected to go down, I see we'll have a lot of influx of people coming into Calgary.
Well, what about the inventory over there? How's the inventory?
The inventory is actually not bad. It was worse before. It's actually gotten up quite a bit now. If we look at stuff here, I can quickly show you. So I think our highest points were hit back in June. That we hit. And that's when we had the lowest inventory. So ever since June ended, July, and now it's August, it's the second month after that, our inventory has gone up a little bit.
Mhm.
And now we're looking at, now it's, I would say it's loosening up a bit in the sense that now we have more choice of product to pick and choose. Back in May, June, it was you, if you need to buy on this street, this is the only house, take it or leave it kind of a situation. But right now it's like, oh, so I want to be on this street. I have 4 options to choose from. I can go A, B, or C, and I can choose from 640, 680, 720. So now they have more leeway and more choice
Mm.
versus from 2 months ago. So that choice, I feel, is giving people the opportunity to negotiate more, especially
Mhm.
on the higher price points. Anything which is 550, 500 and under is going very fast. But anything which is a little over 600, 620-ish, above the median, if they're on the market longer, people have time to negotiate. Like they have the opportunity to negotiate a bit on pricing. So if the rates go down, I think Calgary is going to go insane.
Okay, so right now, what if there's investors right now on this side, like say in the Toronto area right now, and you know they want to get in an investment. They want to one of these properties, not just yeah, like because it would have to be investment if they're located here, right? Because over there, like,
Right.
what kind of clients are you mainly dealing with? Are they living in the place? Are they investors?
No, so I've had a lot of people who so funny thing, I lived in Ontario for 2 years.
Okay.
I mean, I'm mostly Albertan, but I moved for my husband's work and then we came back because, sorry to say, we didn't like Ontario as much as we love Alberta, so we just wanted to come back. But anyways, living in Ontario, I made a few connections, obviously, because I was still doing my real estate there, and I picked up a few leads, connections, people, family, all that stuff. So right now, the people that I'm mostly working with from over the different provinces are investor buyers. They have properties here. Their properties are rented out and they have good cash flow coming. Having said that, all of these people are the ones who locked in their rates back in 2021 and 2020. So they are fine. It's only when the fixed rate changes or their renewal comes is when they will be in trouble. Right now, they're fine. Right now, they're all in the 2.8s, 2.93 range, which still gives them a good cash flow. They're not strapped for money. They're not making 200-300. They're actually making like a good $1,000 or whatever. I would say maybe more after mortgages. So they're fine. Their only issue would come up if our rates do not drop by the time their renewal comes up in 2026, 2027. Projections are that, that far in the time, our rates would have decreased.
Yeah.
So they're fine. There are a lot of pre-construction projects that we have right now. Mostly people from the Ontario, BC side have been buying up condos and renting them out. And the condos are, I think, the most durable product in the sense that because the rent is low, it's like 2,025, 2,800. It's still doable for a lot of people. The minute you go above 3,000, it's not doable for somebody who's earning, let's say, $5,000 a month. So condos are catering to the masses more effectively right now in terms of rents, in terms of affordability, in terms of just being able to survive.
Okay.
Bigger homes are more expensive for sure, but then their rents are like $5,000. Not many people have money to pay $5,000 in rent alone and then have utilities and food and grocery and kids and regular life on top, unless they're making like 15K per month. That's where the challenge comes. But condos are still providing a lot of opportunity. And in my previous slide, I don't know if you were able to see, but the condos have gone up almost 32% in 2 years and 20% in 1 year alone.
Yeah.
So
And I know
we
a lot of developers are doing rental guarantees, like having
Yes,
okay.
2-year guarantees, and then they're also doing your property management, and they're also providing us with rental guarantee, tenant sourcing, property management for 2 years, and price. So price freeze in the sense there is no price escalation like we have in Ontario, like the price can go up, but they're guaranteeing the purchase price of the house.
Okay.
So if somebody bought it for 200 and 2 years down the road, when they take possession, it's 300, then they're guaranteed to be paying 200.
Mm.
So that's a lot. That's the kind of incentive the builders here are providing out. And also we have no land title transfer tax, nothing built. So that's another attractive point.
Okay, so it purchases no land transfer tax.
Nope.
Okay. Okay.
And our sales tax is 5%. It's not 13% like you guys.
Mm-hmm.
So there's another 8% saving.
Mm-hmm.
Yeah.
So you have, that's why you said you have a lot of clients from Toronto that are buying there. So
Yes.
Okay, so is that would you say, like, in terms of percentage wise, what do you like, what would you say in terms of your clientele, what percentage is coming from Ontario and what percentage coming from Alberta?
So I would say about 30% of them are out of province. So out of province, I mean BC and Ontario combined. I mean, it's hard to say how many.
Yeah.
It's if every 10 people that I'm dealing with, 3 or 4 of them are from either BC or they're from Ontario. And they have homes there, and they have secondary, third, fourth homes, investment properties in Alberta.
Okay. And you said there's percentage wise in terms of investors and then end users, percentage wise.
So end users would be maybe half of them, at least for me personally, at least half.
Okay.
Half. So, like I said, the rates do not matter to the people who have to buy. I mean, if you're getting a divorce, you have to downsize, whatever the rate is, unfortunately. They're increasing their family, in-laws coming in, family moving in, all those things, kid going to school, kids moving to a different university, out of town. So circumstances in life are making them do things irrespective of what the rates are. So I would say half of my people have been doing transactions based on these circumstances. And the rest 5 of them, like for every 10, 5 of them are the ones who are end users. They are buying for themselves, for their families, for their kids. And the other 5 are people who are looking into cash flows or investment or, rentals or even Airbnbs. Like, funnily enough, there are some areas in Calgary which do allow Airbnbs right now. Even short term. So that's also happening.
Okay. Love the activity in Calgary, Alberta. I know even we have Shane who's going to speak with us later. He's actually there, and he's into the multi-family and filling up those properties as well. So I know that's definitely a connect that we gotta make sure we extend with you as well. Because exactly. That's good. So no, thank you for sharing those stats as well, because
my pleasure.
The stats there look a little different than they do here in the GTA.
Yes.
And that, we want it to be informed like that. So like I'm sure there's people. Go ahead.
It's very different here, but I would also like to add one thing that obviously GTA is huge compared to Calgary. Calgary is way much more smaller. It's more concentric. But in Calgary, the way things have been going right now is people who find Calgary expensive have been focusing in areas around Calgary. So those are the cities that we have. For example, there's Airdrie, there's Cochrane, there's Carstairs, there's Okotoks. So they're all like within 10 to 20, 25, 30 minutes maximum from the Calgary city limit. So people who have been finding Calgary expensive have been reaching out into these suburbs, so to say. And now our suburbs have started to go up. These were the places Calgarians would move because they were working in Calgary, but let's say they were living in Airdrie. But now Airdrie is now bombarded with all the investors, and now those people have to move to the next town from Airdrie, right?
Yeah.
So it's funny how geographically how it has been changing in the past, I would say 3 years.
Yeah.
But Calgary's been booming quite a bit. We have seen our ups and downs. Like till June, we were hot. In July, August, it's been a little slumpy. Come September, I think the high season will begin again because back to school, parents back to regular routines, no vacations, back to work mode.
Yeah.
So I think September will be. The expectations are that our market should pick up again in September.
Okay. So you're forecasting in next month there's gonna be a rate cut. Is that what you're forecasting?
I'm not forecasting. I was reading some items and I came across this article which said that the Bank of Canada is looking into forecasting at least 3 times till the end of this year. So if that happens, let's say September, it's going to coincide right directly with our high season. And if it
Mhm.
does, then our market is going to swoop up again.
Okay, that's some insight.
Let's see
That's
how
some-
it goes.
Okay,
Fingers
no,
crossed.
thank you for sharing that.
You're
No,
excited.
yeah. Corey says facts. Corey says facts. You know, anyone else want to jump in and just give their insight right now? On the real estate market. How is it affecting you? What are you noticing? And just share it with us. From your perspective. Before we get to the next speaker. A few other and a few more insights on the real estate market. What are you seeing from your perspective?
Sorry. And
Yeah.
I just want to add one more thing to Corey's point. Our rentals have also gone up by 30%. They've gone up. So again, I agree with this point where he says because of the affordability factor, a lot of people are now choosing to rent
Right. Yeah.
versus buy. And the
Yeah.
ones who have rentals, they're actually making more money now because whatever was being rented out, let's say till last year for 2,000 is now 3,500.
Wow.
So in 1 year, they've gone up 1,500 per month
Wow.
minimum on a
Wow.
single family, which is insane. It's unheard of
Mhm.
for people like us who've been in Calgary and they've seen the slump of 2008 and then 2015 oil goes up and slump again and then
Mhm.
over again. And so for me, it's very surreal when I think like, oh my gosh, single family is renting out for 3,500, 4,200.
Wow.
I know for Ontario the numbers might be low, but
Mhm.
for us it's very surreal.
Wow.
We've been in that 2,000, 1,800 range for 15 years.
Wow.
So it's mind-boggling, but it's real estate.
Exactly. And that's what real estate is. Real estate, it goes up and down, but upwards like this, right? So,
Yes, cyclical.
so you're
Yeah.
seeing it firsthand. And right now there's a big spike in Calgary,
Yep.
and we love to see it. And hey, if anyone's planning to invest out there, get in contact with Zena as well, and like make some deals happen there. Just okay. But right now it's right. We don't have any questions yet. So I just let me just go over one, two little articles that we're seeing here. We're seeing rate cuts improve home affordability across Canada in July. So just like Corey and Zena have been talking about, we see right here the rate cuts actually improved. And it made affordability across Canada. More people are actually going and buying. We're starting to see more interest, right? So a housing start for July 2024. Same thing we're seeing, right? So it shows here the total monthly seasonal adjusted rate of housing starts for all areas increased 16%. So now even more housing are getting started now. More housing's getting started, right? Which is great, So we're seeing some positive trends that are going on, right? Retail rents continue to rise. So even in the commercial field, the commercial real estate, we're seeing properties increasing. The rents are increasing and the properties are increasing, right? And then we're seeing over here, we're seeing on our socials, they're talking about the rates are increased, the rates are getting better, So right now we're seeing a lot of consistency in terms of what's actually happening with the market. We're seeing more people saying, okay, banks are with the banks slashing, and this kind of stuff, right? And again, this is what is seeing as well. I don't know if you guys can hear that sound, but talking about Bank of Canada is actually saying that here, let me
Canada could start cutting rates faster. Check this out. Some economists are saying interest rates may come down faster than we thought in order to help Canada avoid recession. This news comes as Canada's economy has been struggling compared to the US, with unemployment rates quickly rising. This is leading some economists to call for rate cuts in September and October rather than October and December, with others saying that the bank is hardly done when it comes to cutting rates. And here's a chart showing the history of our rate cycles over the past 25 years or so. So what do you guys think? Is the bank going to start slashing rates to keep our economy afloat? Let me know.
Right. So we're seeing that. We have other people talk about their insight on the real estate.
Is it the right time to buy? And will the Bank of Canada cut rates in their September meeting going back to back to back? Let's explore together. And now that the conversation has shifted away from inflation, the conversation is now focused on employment as well as the economy. So the CNE had an event not too long ago where there was over 37,000 applicants. So predominantly young people, because young people are the ones that are suffering the most, that are having the hardest time to gain employment, full-time employment. So all these things are now going into consideration as the Bank of Canada makes their decision in the next upcoming weeks in their September announcement. Developers as well have been struggling to meet their construction goals as they've pushed over 75 condo projects to later dates around the Greater Toronto area, which is a big problem because the federal government has a goal to build 500,000 homes a year. Now, with these projects that are being delayed today, there's going to be consequences and ripple effects that we will see in the future. So all these variables with unemployment, lack of construction, lack of investor confidence has allowed many economists and experts to believe that in September we will see another potential rate cut. And with sales at record lows and inventory still at record highs, the economy is struggling. Buyer confidence, investor confidence is very low. So all this could prompt the Bank of Canada to not only cut in September, but cut again in October and potentially cutting again in December as well before the end of the year.
Yes, that's more in line with what Zeno was saying as well as Corey. So it's good to get, this confluence of information, so, I guess that's what we're anticipating. So, anyone that is considering, getting involved with some kind of real estate, hey, the future does look good. The future does look bright. That's, hey, like start looking, start looking at different opportunities, start figuring out what it is that you want to do when you're investing, what route you want to take when you're investing. Because soon is the time, because you don't want to wait till everyone's doing it. Then the market just takes off as it's been doing, as it's happening in Calgary and Alberta. But still, like right now, wherever you are right now, go in and start looking and getting now, before they do continue to decrease. And then everyone's out there rushing at the doors and bidding wars and all that stuff happening. Now's the exact time, right? Yes, Zena said there's always opportunities to be had. So, I don't know if anyone else has anything to add during that session, but it was a good session. And guys, next month, call more professionals. We want more discussion. We want more, people in the industry coming and joining us, giving us your perspectives. We appreciate you being on board. Corey and Albert,
Thank you so much.
everyone that's on here, we appreciate it. Albert, you're here, man. You're consistent. You're in the multifamily. If you don't mind, like right now with the real estate market, if you don't mind just giving your perspective real quick.
I'm not sure what else I want to add to what has already been said. I think the bases have been covered quite well. Just from a little bit of history on where I'm at, I started investing in 2016 and had no clue what I was doing. I bought my first, it was a fourplex, and it was really cheap because it needed a lot of work. And I just saw it as an opportunity to create a little extra cash flow. I had no idea that I was actually doing a BRRRR, but I was fixing it up and continuing to rent it out. And yeah, I had no clue about the landlord and tenant laws. And within the first month, I had a run-in with one of the tenants and he decided not to pay. So I was kind of thrown under the bus. I had to learn all the landlord and tenant laws and get him evicted. So in a way, it was good. That way I got to know what I was doing. And so going forward to 2018 is when I bought my next one. And today I've got 5 fourplexes and I still hold a full-time job. So I'm looking at scaling my portfolio just to get out of my day job and do what I want to do.
Okay, wow. So the fourplexes that you have, like, are you cash? Obviously, you're cash flowing from them. You have 4 of them, so I guess it balances out. But how has that been, and how is the the market haven't had an effect on your investment properties so far?
To continue buying, like in the last couple of years, I found it difficult to find a good cash flowing property. And I've started to broaden my horizons. And at beginning of this year, I had looked in Alberta and the prices were skyrocketing there. And I thought it's nuts to try and invest there at the moment. So I'm looking into the short-term rentals, see if that would be a better avenue to find a cash flowing property.
Short-term rentals, whereabouts? What area are you looking at?
Well, I did have an opportunity thrown in my lap to buy in Mexico, so
Okay.
I have bought land down there with a thought of developing and renting out to the resort that is being built.
Okay, okay. So yeah, these kind of people, let's get them on these sessions, man. We want to know what's going on in Mexico. Zena has Zena, go ahead, unmute
Yeah, I'm
yourself.
just wondering, so is there a particular reason, Evelyn, why you only prefer fourplexes, or is it just because of ROI, cash flow, like all those numbers that you do at the back end?
Fourplex, you could still get a residential mortgage, so it was easier to get a mortgage. As soon as you go 5 units or bigger, you have to go into commercial mortgage. So that's why I stayed with the fourplex. But now that I've got 5 properties, I'm also maxed out with getting a residential mortgage. So I had to go commercial anyway.
That's interesting. 4 plexes and 5 buildings, so that's 20 units.
Yeah.
Okay. Okay, thank you.
Not all major banks will do 5 properties, but credit unions will.
Interesting, thank you.
Yeah, that's some. Yeah, no, thanks for sharing that insight, man. And as you're seeing right now in Calgary, it's interesting because Zena was talking about it's booming, but I guess because you're on Ontario side, it looks like the prices are going up. But it seems it may be safe to say that the prices, we still have room out there in Alberta, right? Zena, we still got room out there.
Yeah, no, I definitely think we have room to run more.
Okay, okay, good
Still
stuff.
there.
Good.
We live 2.5 hours outside of the GTA, so I think GTA is crazy with their numbers. And then looking into Calgary, I thought their numbers were crazy too. So.
No, but if you look out at least 1 hour from Calgary, you'll find that the numbers has changed drastically, because in Alberta, Calgary is very concentric, like I was saying, but GTA is huge. It's like a monster in its own right. You're from Barrie to Whitby to Ajax to all those places, and you're like within minutes you're in those areas. For Calgary, the closest cities would be, let's say, 10-15 minutes out, and then the further out they get, the cheaper they will become. But then your distance from the Calgary center would become huge too. So it's kind of like what you decide. Do I want to be that far, or do I want to be closer but have more appreciation? So that's a very fine line. But I would say if you look out at least 1 hour out of Calgary, you will find some really great deals on land if you want, specifically land, because we don't have too many cities. Our cities are majorly like literally 4 in Alberta. So
if you would buy,
Sorry?
30 minutes to an hour outside of the city limits, would you be able to find a property manager?
Probably yes, because we only have 4 major cities, but we have a ton of towns. So whoever you find would most likely be local to that particular region, maybe to the closest town. But again, there's still deals to be had and opportunities to be found. I mean, if you were really looking for that gold spot in a pile of rock, I'm sure we would find it.
Yeah, I think even the infrastructure out there is now building up, right? In terms of property management, all that kind of stuff. I think now as it's growing, we're gonna start seeing more and more of those
Expansion.
companies get set up,
Yes.
right? Yeah, over
Expansion's
here in
happening.
Toronto, it's more established because it's been on and running, right? But now everyone's moving over on that end, So, yeah, no, thank you guys. Thank you, Alvern. Thank you, Zena. We appreciate your contribution to session. How's the
You're
real estate
welcome.
market going? Anyone have any final words for what they think about the real estate market? Kathy, you're in here. I see you're in a real estate professional, and I see Charles is here as well. Shane is here also. And of course we're gonna give Charles and Shane their time to go in detail. So maybe they may talk about during the sessions, but this is something that we want to continue to have consistently, monthly, right? And everyone just join in on the Monday night. Monday night, you're already partying for the weekend. So Monday night, just get a little insight every month on how's the real estate market, right? So that we could continue to analyze, forecast, and network. So great session, everyone. And I want to now into our next speaker, right? Which is Charles. And Charles, if you don't mind, there we see now his camera's on. He got to show himself, right? And Charles, thank you for joining us. I want you to introduce yourself and introduce what you do and how you can be of service to the community.
100%. Can everyone hear me okay? I'm having some issues with my headphones. I just want to make sure I'm clear.
You're a little muffled, but we can hear you.
Yeah, just give me 1 second. All right. If anything, I can just fix this. But if this is fine, yeah, no, thank you, Richard. I appreciate it, man. I was tuning in the last couple of minutes there, listening to Elvern and Zina's monologue going back and forth, and great stuff. Love hearing what everyone has to say about the current state of the real estate market. It's always good to bounce ideas off other colleagues and professionals, and obviously across Canada. But like Richard said, my name is Charles. I operate a brokerage here just inside the GTA, I guess, Mississauga. Full service real estate brokerage, so I'm a mortgage broker by trade. Now residential, we do residential and commercial, but over the last 3 years, there was an opportunity to really take on the commercial sector of our brokerage. So now I pretty much niched down on commercial finance and lending only. But we still have the residential book that's pretty much turnkey. We are one of the largest brokers across Canada when it comes to commercial financing, next to Bank of Montreal and RBC, being our two biggest relationships. And yeah, that's pretty much where I come in now. What I can say is maybe I niche down and a little bit different is that a good 60 to 70% of my business isn't commercial real estate, but actually commercial business loans. So the mergers and acquisitions, so M&As, and people actually acquiring businesses. So not the real estate at the whole whole, but the business in itself, which can obviously produce another arm, another cash flow segment to, let's say, a real estate portfolio that you may already have.
Okay, yeah. So you said a commercial, you're focused on commercial. So break it down, because I know you wanted to share some stuff and more insight with the people. So go and break it down to.
Yeah, most definitely. So obviously, I believe it was Corey who mentioned a little bit earlier, and he did a really great job in terms of breaking down that realistically China's largest asset to our GDP is real estate, right? And we depend so heavily on real estate to move the needle in China, and we really don't have much industry outside of that. Obviously, real estate it's becoming extremely difficult. And so all of you guys can attest to that in terms of applying real estate from a business perspective. And when I say business, I mean making it make sense analytically for cash flow purposes to live off of, right? Outside of just the equity growth. Obviously, you can't eat or feed your family off equity, right? Which is why the market has done what it's done, and you're seeing a lot of real estate investors hold back and not invest just because the numbers just aren't making sense, especially in your prime markets like the GTA or even really anywhere Ontario. I'll be honest with you. And then you're throwing in the long-term tenant board regulations, which is really impacting investors. Perhaps that's why, Zina, you're probably a little bit more busy out west because the regulations on that aren't as stringent and thing. So what I'm seeing over the last 2 years, 3 years, especially with our increasing immigrant population, is people buying businesses. And I'm sure you guys have probably been seeing it online, a lot of the marketing going behind it. A lot more individuals are looking to actually buy businesses as a way to produce an additional cash flow revenue arm to perhaps an already existing real estate portfolio, like a laundromat, like a restaurant, like a storage facility, right? A lot of these things are becoming a lot more popular in Canada, because again, due to the uh how unattractive real estate has become. And the financing is completely different, right? It's not real estate secured, it's completely secured against the business. And there's the ability to get in due to where the economy is in mix with our demographic. Canada has a much older population. There is a massive opportunity right now, because baby boomers hold approximately 50% of all small businesses in Canada. For those who don't know, small businesses are considered anything. Small and medium-sized businesses are the number one producer of the Canadian GDP. It accounts for about 98% of all businesses registered in Canada. So small and medium-sized businesses are the backbone of the Canadian economy. Over the last 10 years, small businesses account for just over 50%, excuse me, of Canada's gross domestic product, right? That includes real estate within brokerages and things of that nature, right? And then we're looking at also restaurants, looking at manufacturing companies, plumbers, things like that. And to define a small medium-sized business, it's anyone in between 1 and 500 employees will be considered a small and medium-sized business. After that, it's large conglomerates, large corporations. Again, which really don't account for much of kind of overall GDP. So why is this important? Well, baby boomers are on the urge of retirement, and what they're saying right now, statistically, is that potentially 1 in 5 baby boomers, 1 in 5 businesses over the next 5 years will either shut down, because there's no exit, there's no succession plan in place, because their kids or their grandkids do not want to take over the family business, so they're just forced to shut down. Or if they're lucky, they can sell it in the extreme discount, right? The way they can retain at least some funds and then go into retirement. Hopefully, it's a healthy retirement. So we're seeing a lot of individuals now come in and be able to create value for those individuals who are looking to exit 2 to 3, 4 year succession plans where they're able to work in the business and gradually gain ownership, all right, of businesses that are already doing 10, 15, 20, $30,000 net cash flow with an already established size, right? And it's becoming a little more attractive now, to again build an additional cash flow arm. So let's say you already have a small portfolio of real estate properties now, isn't really creating the generational wealth that you want, right? One thing that I realized in this business, being a mortgage agent myself, I was a real estate diet. I was all real estate all day, every day. You couldn't tell me nothing if it wasn't real estate. Everyone has heard the cliche that, the majority of millionaires, or over 90% of the world's millionaires, are built off real estate. And then you dive into that a little bit more, but you realize a lot of individuals don't understand the definition of what a millionaire is, right? A millionaire is wealth. Their net worth is worth $1 million. But it's not liquid in a bank account. That's not necessarily how much you even make on a monthly basis. And it took me a little bit to do a little more due diligence, really dive in. And you look at, some of the world's wealthiest individuals, Canada, America, or even international, they're not born. They actually made money in a business. They ran their business, they scaled their business, and then sunk their money into real estate, which is the number one wealth curator that we have, and the easiest way to pass down wealth from generation to generation due to all of the, taxes and taxes and things that we can get with real estate, right? Again, this is going that maybe we're not with the multi-unit investors, things like that, because obviously there's some good cash flow there, and 15 will click on that in the next segment, right? So yeah, buying businesses is definitely, I think, Canada's next big opportunity for individuals who are trying to really create cash flow opportunities for themselves and their family to actually build now, generational money, which then can then return and park into real estate to create generational wealth.
You're going in right now still, and honestly, the sound is little off, but we're hearing you. We're hearing you. You know,
Yes, okay.
I think it's are you on like on a headset?
How about now?
Oh yeah, much better.
Sorry about that, guys. Is that better?
Oh my gosh, yeah, man. Yeah,
I
man.
apologize.
Okay. You're
You should have
teasing
cut me
us.
off, man.
You're teasing us, yeah. You know, that's good though.
Did
Yeah,
that
so
make sense though?
it did, but obviously like it wasn't the easiest listen. I'll be honest with you, but we did get it. But if there's any key things that you really want to emphasize, if you don't mind just saying that, like from what
Yeah,
you're
so I
saying.
guess just to quickly summarize again, I think the next great opportunity in Canada right now is buying businesses because of the demographic, the way Canada's demographic is from an age perspective. Baby boomers hold the most small, medium-sized businesses, and when I say hold, I mean they're actually the owners, the presidents on those articles of incorporation, and they don't have a succession plan in place. They don't have a succession plan in place. So what's happening is an article that was released not too long ago from Yahoo Finance Canada mentioned that 1 in 5 businesses in Canada, small and medium-sized businesses, will go out, all right, because there's no one there to take over. And unfortunately, family, kids, grandkids don't want to take over the family business. So they're going to either force to shut down and close up shop or sell at an extreme discount. This just simply provides an opportunity for individuals like us who are looking to create maybe an additional cash flow arm to pick up those businesses at a discount, right? Similar to where I think the golden era for real estate in Canada was 2008 up to like 27, 2018, right? And Richard, you can probably speak to this a little bit better, where you're picking up, single family homes in the East End for like 200,000, 300,000, Brampton, 400,000. Those same properties are now selling for close to 1.4, 1.5, 1.6, gone are those days, right? That was really the golden era. And I think we're entering the golden era in business because we're a little bit behind America in that sense when it comes to mergers and acquisitions. But because of the diverse population that's coming in from India, from West Africa, from the Caribbean. These are very entrepreneurial, savvy individuals who are coming in, and they're born self-employed, right? So they're coming in and starting business and growing and scaling from there.
Yeah, that's serious. Zena, you have your hands up. Go ahead.
Yes, I just wanted to ask, so let's say if somebody was interested in purchasing a business, and from what I understand, you're mentioning these would be recession-proof businesses like small ones, laundromat or dry cleaners or convenience store, grocery stores, all those things.
Yep.
What is the next step? Where do we look? Because in the US, I know there's a lot of data out there, like there's websites and there's all those things that we can look for these kind of businesses. But where is the opportunity in Canada? Because our rulings and our laws and our privacy things are very tight. And it's really hard to find a deal like that unless you know somebody who knows what's happening. Is that house is that shop down the corner? You know what I mean? So where do we look? How do we
100%. 100%. No, you're right. I'll be honest with you. There isn't a lot of information out there in Canada specifically because it's so fresh. When I say we're not even like at the beginning, this is such a new industry, but the best place to look is IBBA Canada. Okay, so that is Business Brokers Canada's association. These are business brokers, licensed business brokers across Canada, and they have listings for agents, pocket listings, things like that, similar to a realtor. Honestly, that's selling a house, except they specialize in selling businesses. Reaching out to individuals like that would probably be your best case scenario because then they can tell you what they're seeing from a grassroots level, right? Anything off market, anything that they have on market, and any industries right now that are flourishing. Myself, I'm on the back end, so I take care of all the financing and I serve more so as a consultant to really teach and educate individuals how you need to underwrite a deal, what needs to go together, what you need to have already, before we present a file or case to a bank for you to acquire this business.
So what is that? What is the requirement?
So, good question. I'm going to try to summarize this as quickly as possible. So, It ultimately depends on the industry of the business that you're getting into. All right, will determine the level of financing that you'll get. For example, I had a client that just purchased a pizza franchise last month. All right. The pizza franchise, just to make numbers nice and easy, the pizza franchise was, let's say, was sold for $100,000. All right. Hospitality is not the greatest industry in Canada. Let's be honest. Due to COVID, it was the number one affected industry. Due to COVID and all the shutdowns. So restaurants, hotels, things like that, gas stations, banks aren't really a fan of, but it's starting to come back. That client was able to receive 72% loan to value against the purchase price of that business. So that means we were able to get him a loan for 72 grand. And then the client had to come up with the shortfall. So in this case, just under about 28,000 plus HST. Now I'm making these numbers smaller just to make it easier from an understanding perspective. So on hospitality, 70-30 split. The bank will give you 70%, and you have to come up with 30. Let's say that industry was a dentist and he was purchasing a dental clinic. The bank would probably give him 95% to 100% loan to value. Reason why? When's the last time you ever heard a dentist go bankrupt or go under? Probably never. So depending on the industry that you're in, will ultimately determine the level of financing, how much the bank is going to leverage up. So similar to real estate, how high is that loan to value going to be, right? If you're buying a multi-unit with MLI Select in comparison to a single family home, the multi-unit MLI, you can get to 90, 95% loan to value, and compared to a single family home, you're not getting over 80 because that is more of a safe space for the bank. They like those deals better. There's an incentive there, right?
Yeah. No,
Right.
yeah.
And then I guess one quick thing that most people should know is, I guess the easiest thing is the business. If you're planning on buying a business, you don't need to have revenue. That's the biggest misconception I hear all the time. The business does not need to have revenue. I'll put this in the group chat. Everyone should know this. The Canadian Small Business Financing Program. I'll say it again. Canadian Small Business Financing Program, CSBFP. All right. This is a government-backed program, almost like an insured mortgage if you're buying a property, a government-backed program that allows you to purchase a business up to $500,000. All right. It's backed against the leasehold improvement and the equipment in that business. So let's use this pizza franchise once again. Let's say I don't want to buy a pizza franchise. I just want to start my own because it's cheaper. I don't want to pay the franchise fees, nothing, right? I find a lease, perfect. In that lease, it's going to cost me $50,000 to build out the pizza store. I have to get my general contract in there. The whole build out's going to cost me $50,000, and then the equipment is going to cost me another $50,000. Right? The commercial grade oven, the commercial grade freezer, tables, chairs, signage, etc. In total, 100. The bank would then just loan me money against those invoices. Depending on the industry, how much they leverage up will ultimately be determined by that. Now, obviously, credit score matters, personal profile matters. There's a story behind it. Like, why would you be able to run a pizza store successfully? What background you have in running pizza franchises? These are things that we put together. And then there's business plans, projections, which a consultant like myself will put together and present to the bank on your behalf, right? But I'll say it again, because I know Corey, you asked, Canadian Small Business Financing Program. That's the loan program. That is the easiest loan program in Canada and probably going to be the most used over the next 5 years, similar to like a 5% down insured mortgage.
Samuel, I'll also ask what the website was called again.
Oh, sorry. Just type in IBBA on Google. It's Business Brokers Association.
Okay. All right. So does, in terms of commercial loans, so it of course just businesses, but does it do they also give business loans for like people who invest in like multifamily?
Yeah, 100%. So obviously, see, this is the thing. It goes hand in hand. A lot of people who buy businesses, they also buy the real estate along with it, right? Naturally, I do like myself. I'm starting to see a lot of my investors purchase multifamily buildings with a commercial space. But I'll let Shane touch on that because I know that's a little bit more of his area. But 100%. Now, it wouldn't be a business loan though. It would be a real estate secured loan through CMHC or a bank of some sort.
Okay. Okay. Yeah, so that no, thanks for that, man. You know, we appreciate that insight. You know, even Corey saying great info because yeah, you know how you're talking is we've seen the real estate market just take off, right? And you know, I'm grateful and timing just happened to work on my side. I bought in 2014. You know, me and my wife, we bought something. That's when we're just kind of like, you know, getting together. But we bought because we're thinking, okay, we're growing our family, and from there it just took off. So it was the perfect time, you know, to really get in. And right now, how you're talking about the businesses, you know, it's kind of like the same situation. So, you know, you saying that you don't need the financing and all that, you know, I think that's something that really, you know, is some deep info. But you're saying that you have to get the invoices. So it sounds like you have to kind of finance it first, and then from there, then you could get the supplemented financing. Is that what you're saying?
Yeah, for sure.
Right.
Yeah. So I'll break it down just so people understand. So before, what happened was, and I'm sure we can all have a good laugh about this. What happened was over COVID, individuals saying, "Hey, I'm buying this pizza franchise. This is the $50,000 invoice for my general contractor. This is my $50,000 invoice for the equipment, the third party to purchase the equipment." And then what the bank would do is like, perfect, we're going to give you 70K out of this 100,000, right? And the bank will just deposit that 70K right into the borrower's account. Unfortunately, you know, next thing you know, they just take that money and they're just buying real estate with it, or they're leaving the country because once the money's lent out, there's no recourse, right?
Mm-hmm.
And remember, businesses, it's not like real estate. There's no security. They're not putting a lien against a property. It's unsecured, right?
Mm-hmm.
So finally, the government Canada, you know, gave their heads a shake a little bit. So what they started doing now is, okay, cool. These are the invoices. You put the 30% in the corporate bank account, right? Because we're going to give you 70%. You put the 30% in the corporate bank account, and we'll pay the general contractors directly the 70%.
Okay.
Right? That way, it avoids that. And then on top of that, what they're doing site check visits. So after funding, they'll send out a representative to actually go and make sure there's actually a legitimate pizza store.
Okay. Yeah,
if that makes sense. So that's how the funding's done.
Yeah, man. You know, that makes a lot of sense to me, man. Well, you know, obviously there's more to know, and that's why we're here to grow, man. We're on these sessions, you know, monthly. We want to build this and build a community, let everyone get involved, invite your people so we can all get this insight on, you know, information just like this. Zena has a question. Go ahead, Zena.
Sorry, all these conversation is getting my juices flowing. Just one more question. If there is an existing business or an existing shop, retail, whatever, can this financing for a small business apply to that? I don't know if my question makes sense. I'm just wondering, like, would it be only applicable to new businesses, or would it be we can take it on to an existing business and apply the loan?
An existing business as well.
Oh, it does? Okay. So is there different criteria for it, or would it still be?
So at that point in time, if it's an existing business, then they will take into consideration the financials, the revenue of that business.
Okay. Interesting. Thanks.
Yeah, hey, thank you for real. That's what the platform's for us to connect. You know, Charles, make sure you please put your contact or wherever it is that you can in the session. If there's any more questions for Charles, you know, great session, by the way. And, you know, even though half was muffled, the piece that we got was valuable, man. It was real valuable, for real. You know, so.
I'm so upset, man.
No, but yo, honestly, it's really insightful, man. So we appreciate what you said. And again, like I said, this platform, honestly, it's a platform. we want, if everyone's involved and everyone goes and we make this big, like, we want you to host again. We want you to be a guest speaker again. For Shane to be a guest speaker again. Corey, like, everyone, to just, let's have a meeting where we could connect. We could just get this information out there, and then everyone could just connect and grow with each other, So, thank you so much, Charles, for coming in and giving us the insight. And it's a great lead on into Shane, because Shane, Anra, if I said that correct, you're going to say it properly for me, but he's been in multifamily, he's been raising capital, and he's getting like many properties and flipping them, and he's knowing what to do. But I'm going to let him say it. I'm going to let him talk about, mastering multifamily and raising capital. Shane, thanks for joining us on the session.
Thanks for having me. There's nothing else I like more than talking real estate. So any chance I get, I like to hop on. Yeah, like he said, I actually started in the mobile home park space. So we bought some mobile home parks. We were in northern Manitoba at the time. Can you hear okay, or is there an echo here?
No, we got you. You're good to go.
Okay. And then I'll just give a very, very brief up till now, and then you can dig into whatever you like there. Pretty quickly realized we couldn't scale up the mobile home park business, so we jumped into multifamily. That was kind of the next logical step. We moved out to Alberta in 2020. Since then, we've I guess grown our portfolio. We're just under 400 units now. So now we actually have a fund. We raise capital and buy properties. We also own the property management company that manages all the properties. So yeah, I'm kind of an open book. If you guys, I like real estate cycles. A lot of the stuff I've sat in tonight, there's a lot of like details. If you want to go more bigger picture, I really like that stuff, longer real estate cycles, things like that. Or if you want to ask about the management or the raising capital, whatever you guys want, I'm here for it. So.
Well, yeah, if you don't mind, first off, share your journey, if you don't mind.
Yeah, so I'll just start, I guess, briefly at the beginning, because I kind of touched on a few things we did, but I had a lot different, I guess, upbringing than most people. So I was raised in a Mennonite community, so it's very tight knit. There's no TV, no radio. First one in my family to actually graduate past grade 9. So they only go to grade 9 and they kind of start in the workforce. So, and I tell people that only because it's like there's kind of a myth and a reality out there that buying these larger buildings and stuff, you have to be part of like a special group or a club. And that really isn't the case. I had no connections, but didn't grow up wealthy, nothing like that. So but you do still have to be on the list to get this stuff, and we can get into that later on. But that's kind of how I started. So I farmed my whole life. First business I opened was actually a gym. We ran that for about 6 years. And then, yeah, I had read an article in Forbes. It was called Mobile Home Park Millionaires. And it was fate or God or whatever you want to call it. The park in our town went up for sale. That's how I got the first step into real estate. That park, we kind of did like what people do flipping a house. We did it with the mobile home park. So it's a lot different model, but we went in, put a bunch of money into the park. We did the roads, brought in new trailers. We got the drug dealers out. We did the whole thing. And we were able to build up some equity and then buy our second park. And that was kind of the step into it. And then, like I said, in 2020, timing worked really well. We built a gym. It was called Fit 24/7. So it had never been closed up until even for like 1 hour. And the day the sale went through was the first 2 weeks to flatten the curve. And we all know how that went. So we sold the gym, moved to Alberta at a pretty good time, and have kind of been buying ever since.
But when you started buying, so you sold the gym, you had some money that was there, and then you said, okay, let's go buy a property. So what did you jump into first? Were you in single family first, or you just went straight to multifamily?
Yeah, so before we moved, we had purchased 2 smaller 8-unit properties out here. So we already had those 2. But no, when we moved out here, for me, like I said, I'm a bigger picture guy. So I wanted to build a portfolio. It's very hard. It's easy to get caught. Like there was a guy on here earlier, I don't know if he still is, who's buying the 4 units. And he said, well, it's easy to do it because I know how and I can get a residential loan. First off, what he's doing, keeping his job and doing it is the way I think people should start. I think that's great. But a lot of people get caught in that trap where it's like, I know how to do this. So I know how to buy an 8-unit. I know how much capital I need. I know what it takes to do it. And it's very easy and comfortable to get caught in that. I didn't want to. So right away, we knew I wanted to build a portfolio that a bigger company would buy as a portfolio. No one's ever going to come and buy 54 unit properties, right? So it's very hard to sell them. And if you get enough of them, it does become, this is my personal opinion, and it's not for everyone, but it becomes a massive liability because it's impossible to manage properly those buildings. If you want a third party manage them, nobody wants to do it. I mean, even on an 8 unit, you're maybe paying a management company at 5%, you know, it's under $10,000 a year. It's probably 5 or 6,000 a year. They're not going to put the time in. They're not going to do it. Now you have to a lot of times start that way, but you want to transition out as quick as you can. So the first property we bought was a townhome project. It was 27 townhomes. So again, it was smaller than the stuff we buy today, but it had enough scale that packaged with other stuff, you know, someone bigger could buy it. And then as far as kind of getting on the list to get some of those things, that what helped us a lot in a market like we have today, it's a lot harder to get a really good asset, right? If you're a brand new investor. We came in right in COVID and nobody else, the first 2 deals we bought, people had left money on the table. So there was really no one else there. And we still had to basically write a resume for them on why they should take it. We could prove we had the funds, and we had to show like, hey, we've managed other properties, we've ran other businesses, just for them to accept the offer. Because as you know, any broker out here knows, you don't want to waste time putting something under contract and not having it sell.
Yeah, that's serious. So, you know, one thing that you were repeatedly saying was that you went in investing with a portfolio that someone would buy. You know, Charles was just on here, was talking about buying businesses, right? So I want you to really expand on that, you know, like that mindset, and then what are the things that you're looking for to make somebody want to buy, and why are you setting it up so that you're setting up so someone wants to buy?
Yeah, and again, I don't want this to come across as you have to start with a massive building, because I didn't start that way. But there's a big difference in let's say I want to sell. Here's an example. The first 8 unit property we bought, the owner, the night before the sale went through, he went and took the cameras out of the building, right? He went and like basically stole them, but they weren't in the agreement. So he took $5,000 to do it. The last building we bought, we found out it had aluminum wiring, and it was going to cost just under $100,000 to get it, so we could get insurance on the building to make it right. And that, you know, the company that owned that building didn't even bat an eye at changing that. They didn't try to change the price. They didn't do anything. So it's a different level of buyer. So when you're buying at a bit more scale or just better buildings, you're going to have a better person buying from you, right? Because if you're finding just the best deal and it's smaller, the person that's going to buy that from you, at some point you're going to want to exit that, right? Maybe you hold it 10 years or 20 years or 3 years, but you want to sell it, and it's who's going to be buying that from you. So if you're buying a good asset, and for me, that means bigger. That's not everyone's idea, but you want that institutional person or a bigger person buying it from you, because they have money generally throughout all cycles, unlike the people like, you know, who are just starting out and are trying to find their first deal. If a recession hits, they might not have the capital, or they're going to try to nickel and dime you. We just sold those 8 units, and, you know, the stuff that people were bringing up they were non-issues, right? And they're bringing up like a crack in the stucco, and they want a discount on the price and things like that. And we obviously, like I said, I'm a vision guy. So from day one, we had a vision of where we wanted the company, and we had to do that at scale. We couldn't do that buying smaller properties.
I get you. And then now you said you have about 400 doors that you have right now. Like, are they all similar, or different kinds of properties, commercial, residential? Like, how are you running them?
It's all residential. So I really like the last property we bought was 94 townhomes. I like townhomes, but it's either townhomes or apartments that we buy. Yeah.
Okay, and you're buying them like are they like condo townhomes? Like, is it like row housing, or is it like individual like units? It's more like a condo town complex kind of.
Yeah, a lot of the ones that we bought they're all built to rent. So they're row townhomes, and you're buying the whole, like that was 6 acres. So we bought the whole thing. We're not buying like individual condos inside of a complex. You don't have control that way. I don't want to deal with other people telling me if we can do roofs and that sort of thing. So we buy rental townhomes.
Okay. Charles, go ahead. You have your hand up there. You want to chime in here?
Yeah. No, for sure, Shane. First of all, thank you for breaking that down. I appreciate it, man. You've brought up I keep hearing a pattern in terms of thinking bigger. Just curious, how important was it to start with the end in mind? Because it seems like that's kind of like where everything was from when you sold the gym. You kind of knew where the direction you guys wanted to take the company. How important was that? And we'd love to hear a little bit more about like the reverse engineer process to obviously because that's where you got to the 400 plus units.
Yeah. And again, that's what when I started out, I said, I'm like visual, a vision guy, not so much analytical. So like my wife luckily is, and she runs all the process and stuff in our company. But yeah, I don't think there's anything as important as that. And that's what I tell everyone. You have to understand where you're going, and you have to be able to clearly tell people that vision. So when I came to the city, and now it's funny because we'll all laugh, the brokers will tell me that they laughed at me and stuff. But when we came to the city, we had no property. And I told everyone by the end of 2024, that was our whatever 3.5 to 4 year goal. We wanted to hit 100 million in assets under management. So we're at 70 right now. If we're looking at a deal right now that would get us there, I don't know if we will. But when you have and in a clear path to get there. So we knew what we needed to raise. We knew what kind of properties we needed to buy, and we could articulate that. Then people get excited because it's like if I started the company, and what changed my life, and I know a lot of people in real estate, listen to Grant Cardone and stuff, but when the first time I ever read the 10X rule, it's all about thinking bigger, right? And I read the book probably every year, and at different points in my life, it shows me different things. But at that time, I was driving the combine. I was farming still, and I had a piece of paper, and I had drawn out. I still have it, where I had drawn pictures of 10 houses, and I said, in 10 years, I want to own these 10 homes, and if I could cash flow on 10 homes, and farm, it's gonna be great, right? And I read the book, and I thought, well, how much harder would it be if we up that, right? If we go to 100 or 1,000, and if you do that and work backwards, it forces you to change the way you do it. So even if I moved to the city and I said I want 100 units in 10 years, I guarantee I would blow that out. I would have got 200, and I'd be like, man, this is unreal. And I could have bought 10 units or 20 unit properties. But if I set the goal at 1,000, I can't do that anymore. It's impossible to buy 110 unit properties in that time frame. So you have to look, okay, well, we know that I need to average, let's say you said 1,000 units in 10 years, you need to average 100 a year. That's a different look. That's a different company. You need employees, you need infrastructure, you need all of these things. That's different than the small goal. So if you set the goal bigger, and it's hard for people to do, and you're vulnerable, and you go and tell people, and it's scary, and they're going to laugh at you. But that's the whole thing. For me, it's like a thing. I'm like, I'm not going to embarrass myself and set the goal and not get there. So it holds you accountable. But you have to have it. You reverse engineer it, and it can be any part of your life. You start, here's where I want to be. How do I get there? Like people, it's everything. I wasn't able to catch the first person on how you dress for confidence, or I think was the title, but something like that. It's like, I think of that all the time. It's like, well, if I want to be someone who's raising, instead of what we raise now, 100 million at a time, what does that person look like? What does he talk like? Who does he know? And because you're not going to turn into that person. You're not going to get to the point in your life where you're like, hey, now I'm able to raise $100 million, and all of a sudden you'll dress better, and you'll speak better, and you'll know all the stuff you should know. You have to, work into that person. So it's the same in that part of your life, right? And so, yeah, that great question. To me, it's everything. It's vision. You set it out there. You need short-term goals too. Like I set, like, openly to my employees in the company, we have 3-year, 5-year, 10-year goals. But we also have little steps to get there, because it gets pretty discouraging if let's use 1,000 units and you 2 years in, you're at 20. It's like, well, we're not getting there. So you have the steps to get there, right? And make them realistic. And it can be leads, it can be, tangible things, but it's like, hey, I'm checking something off every day, right?
Wow, that's amazing. That's amazing. Thanks for asking that question, Charles. And we appreciate that, because that's how we can expand and really get this information out there. Right. So you're right now you said you're in Alberta. So the multifamily, you're finding Alberta. I know Zena said there's multifamilies that are there, right? But like, what is the process that you're going through when you're analyzing them, right? She's a realtor out in that area. I don't know what are you looking for? Because you said you have one that you're working on right now. You're at 70. You're looking to get to that 100. You don't know whether it's going to work out or not. but analyzing this deal that you're working on right now, like what are the key points that made you want the deal, and why it may not potentially work out as you said?
Yeah, it just on the working out, I guess we'll see. It's a little more specific now where we're at versus starting out too, because you have a little broader range when you're starting out. Now we're just pretty like we're very in our city, there's only a couple brokers that get bigger deals, right? There's probably 3 brokerages that get the majority, like they would get 95% of all of them. And we have good relationships with them. So on the bigger stuff. So, and we're very clear, like I tell them, we want this size of deal. I'm not saying, hey, we want anything from $1 million to 100 million, right? It's like, hey, here's our deal size. Here's the amount of units. I don't buy super heavy value add. That's not our model. Up until now, we haven't bought new product. We'll probably get into that before too long, but we have a pretty small box. The reality is there's not that many properties in the entire city like that. And there's very few that come up for sale every so often. But if you're clear on what you're looking to buy now, if 100 unit 1980s or early 2000, whatever comes up, they're going to call and we'll be on the list of people who realistically can buy that building, right? Because not everybody can either. So that part, it gets easier, but the competition's a lot bigger. Like the last couple deals we bought, like the next people at the table are 10 times as big as we are, right?
So what is it that you're looking for? Is it on their side? Is it based on the offer that you gave? Like what? Like right now, like where are you in the analyzing process? Like the other companies, you said they're 10 times. Like, you feel they're going to outbid you? Like I'm trying to get an understanding.
Yeah, no, the reality is that most multifamily, it's almost 100% reliant on financing, right? So like we work with one of the biggest finance brokers. So the last 3 deals we bought have been from the same company. That company calls my broker and says, what can somebody get for loan wise for this property? And then I call my broker and say, what can I get for this? Right. And so, there's not a ton of room there. When interest rates and cap rates are so close, there's almost no spread today. There's not room there, right? If you're going to start putting in way more down payment than the next guy, you can do that. Some companies do, but your margin goes away. So you kind of know, and then it's just playing the numbers one way or the other. So we put a huge emphasis, and most of our time is spent on properly managing the asset. So we always feel like we can get operational efficiency there. I'm very confident I can come in, and that's a benefit of being smaller. That goes away when we get bigger. But it's like as of today, I guarantee you I can come manage the property and the asset a lot more efficiently than the big company, right? And people starting out, if you've never bought a property or buying your first property, there's a huge benefit there compared to bigger companies, right? You can do things yourself. There's always a positive to every negative. So if people think, oh, being smaller, you have all these negatives. Well, most of the companies that I'm bidding, that bid against us now have a huge board they have to go to, and they have all this bureaucracy. We don't have that, right? We can make the decisions quicker. And so that's, I don't know if that answered the question, but
yeah, for sure. Charles, go ahead.
Yeah, sorry, I mean, I can keep talking for days. But you mentioned one of the classes that right now that you guys are at least looking for as part of your portfolios are like the townhomes, right? I'm starting to see a lot of, at least on my end, I'm starting to see a lot of townhome development projects in the GTA go into receivership, which is leaving a lot of opportunities. I just financed a 10 townhouse development that was into receivership if someone bought it, right? Is that where you're seeing the opportunities that you're in? I don't know if it's a little bit different in Alberta. Is that what you're seeing, where because these developers got into these projects prior to COVID, and obviously the cost of lumber, cost of material skyrocket along with interest rates, forcing their project to go overrun, not able to get pre-sales, et cetera. Now they're selling and people are picking it up, but there's an opportunity now at least to pick up at a little bit of a discount. Is that what you're seeing, or are you saying like they're just turnkey townhomes already and you're just buying them up?
Yeah. So I guess that's the kind of a product of real estate being so regional, right? Like it's almost hard to the market where you guys are and where we are just aren't, they're not even remotely like
Yeah.
I'm looking at brand new townhomes just built, and they'll be between, well, there's two different ones for sale, but they'll probably be, $215 a door, right? That's a huge
Yeah.
gap from where you guys are probably at, I don't know, 500,
No,
and it depends. Like, it's not like
for
we
sure.
can't, but these are purpose built for rental. So these aren't, but yeah, I don't know as much as developing to sell as condos and stuff. That's a different look. These are purpose built rental.
Purpose-built
townhomes.
rentals, got it.
Yeah.
And you and the seller, I guess this is where I'm confused. Is the seller just selling them on like someone owned them and they're just offloading off their portfolio? Is that what it is? I understand
Yeah.
the multi-unit, that makes sense, but I'm talking about like the purpose-built townhomes.
Yeah, it would be the same. They'd be like a merchant builder, right? They'd build them and
Got
sell
it.
them, and they make their margin on the development, and yeah,
Got it.
or
Got
they
it.
might hold them for a few years and do it. But
Fair
Okay.
enough. Okay, that makes sense.
Yeah, I get you. Because if it is a lot of property, and like say for example, when you guys retain them, you guys don't really offload them, right? Like you guys don't really sell the units once you retain them, right?
no, that's our model. We're long-term buy and hold. Some people do. I mean, lots of people buy and flip and turn stuff over, but that just or they have a funds that they're going to sell in this many years, depending on the fund or depending on the way the deal was structured. We don't do that. We're long-term buy and hold. So, I mean, I everything we buy, we go into it. 10-year would be the minimum we'd want to hold something.
Okay. And then on top of that, you have investors. So you guys capital raise. So can you go more into that? Like say, there's someone on here that may want to invest in these properties. Go about, what the process is with that.
Yeah. So when we started, like I said, we kind of knew right away, we couldn't get where we wanted to go on our own. Like we were going to have to raise capital. We did buy the first two on our own. And then when we bought the third one is when we structured what we have today. And it's ran as a fund. So when an investor comes in, they're not investing in a specific asset. They're investing in all the assets that are in there. I prefer that model for a couple of reasons. One is you don't have an exact, if you come in on a deal today, it has an exact date when that loan's due. And so if we have to sell and interest rates are really high at that time, that really affects that exact deal, right? Or if we have to refinance. If it's inside of a fund where you bought for 4 years, you're going to catch some bottoms, you're going to catch some tops, but it averages out. And it also, when we take a property over, you never know, it's never going to be exactly how you thought it would be or underwrote it. So you have a bit more stability as far as you have hundreds of other units that are already cash flowing when we take on a new unit, so it can kind of carry it, right? But yeah, it's a limited partnership, so a lot of the benefits flow through. I'm the biggest investor in the company, so we structured it, so it was very beneficial for the investor.
Okay, great. So as an investor comes in, kind of they're seeing what you're seeing, right? Like in terms of returns, they kind of, well, obviously not on the same level scale, but based on what they put in, they're kind of seeing like what you're seeing, right?
Yeah, exactly. We have a distribution. We pay the distribution monthly. We wanted it to be about as similar to somebody buying a property as it could be while investing alongside other people. So we send out the distributions monthly, and yeah, all the investors are part of the mortgage pay down appreciation, just like if you bought a property.
Okay. Any final questions? Or we have some people even just logging in now, and once it's done. But any final questions for Shane? Really, really insightful, Shane. Obviously, we want more time with you, but like with the session, and we're here to kind of like warm people up. And then even if you could post your link, like how do we get you and stay in connect with you? Mylene, I'm sure you have that, but if you do, please post it, because that's what we're looking to do. We're looking to build these relationships and see how we could grow together. You definitely have a wealth of knowledge. You've been in it. You've been through your ups and downs. And I know there's investors, frequently that are looking for new opportunities and want to get out there. Zena, I know you don't have any final words to say to Shane. You guys are in the same province there, So I don't know if you have anything that you want to put out there.
So the way Shane's put up his stuff, it's very, obviously I'm a real estate agent. He's very mass vision, like it's all mass product for him. For me, it's sales. So I think we're in a similar field, yes, but it's still two ends of the spectrum. So I can relate to a lot of that. I find it very interesting. I didn't even think about it ever in that scenario. So for me, it's definitely good information to have. It's definitely good. I'll definitely be connecting with you, Shane, on Instagram and reaching out.
Perfect. Yeah, and it seems like if a lot of people are realtors and stuff, I'm just as excited about that part of everything. Like I just would tell people, look at bigger, like a little bit bigger economics. Like we are in the worst housing crisis. Like it gets talked about in the media, but not even close to how bad it really is. Like we're so undersupplied, it is crazy. We built more houses in 1970s and we had half the population than we build today. And single family homes is even worse. We're building one single family house for every 30 people of population growth right now. We used to do one for every 2 to 4 people. That isn't changing anytime soon. We could have housing be free today and we couldn't build enough houses. So yeah, I think there's a lot of runway. That doesn't mean there's not going to be ups and downs, but we're in a huge housing crisis and there's not a clear sight to get out of it.
Well, okay. Well, Gloria has a message, but when you're talking about the huge housing crisis, like, if you don't mind, just giving a little expansion from your perspective. When I know you briefed on it, but when you're saying there's a huge thing, then obviously there's a lot to unpack there. But yeah, if you don't mind, quick going over just a little what you mean by that, and then Gloria, please ask your question.
Yeah, this is something I've just been like passionate about for a long time, but we're not the government. Like you hear about immigration and stuff all the time, and people are like, oh, what's the problem with it? We are like when I moved to Edmonton, we had 7% vacancy, and then it went to 4.6, and then it went to 2.6, and now we'll be at under 2%, and we're still bringing in and growing as a country by numbers that it's just like you imagine growing by 1.2 million people and we built 220,000 homes, right? We used to build in the 80s or 70s, we built 280,000. We had half the people. We only grew by about 200,000 people a year. So the numbers worked, but now we've ate through all the vacancy in the country. We're the lowest vacancy the country's ever had. And now we're still bringing in record. We just broke, last quarter was another new record, right? So we're having this record number of population growth, but there's nowhere for people to go anymore, right? There's more unemployed. There's more there's more homeless people in Ontario. There's about double that there's in all California, right? So we have a problem, and there's no solution out. We don't have the people to do it. The construction industry. If you look at the amount of construction industry people that are getting to retirement age versus the people coming in, that's not a good balance to have, right? That for sure where you guys are, it's a little quicker out here to build stuff, but we're in this, we don't have enough land annex. We can't build fast enough to do it at this point, right? Like everyone's seen all the CMHC numbers on how much we'd have to build. But when you look at it a little bigger, like a guy just wrote a book, it was called I don't know, How to Fix Canada's Housing Crisis, something like that. And he listed a couple things, 10 things that the government could do. And he said, if they did every single one of these things, it would start to get better in 10 years. And it would be back to like a reasonable housing situation in 20 years. So that's where we're at. And we're just oblivious to it. It's just, it's ridiculously unaffordable in most places in Canada. Like we're in Alberta, people spend maybe 40% of their income on housing. I think you guys are at 70 and BC's at 80, right? That's not sustainable. But so yeah. And then a great book for everyone. There's a book called The Secret Life of Real Estate and Banking, and it's on a 20-year real estate cycle. And if you look at where we're at and you look at that book, it just kind of gives you an insight on I guess going back in history, what's happened and what probably will happen again. And it's gives you some insight, I guess.
So overall, it sounds like real estate's the way to go. That's what it sounds like.
Yeah, over time, right?
Yeah,
That doesn't mean there's
exactly.
not dips, and that doesn't mean there's not ups and downs. But yeah, it's there's lots of benefits to it for sure.
Okay, Gloria, please ask your question.
Hey everyone. Yeah, I came in late. Just has been a busy week for me, more like a busy month. I've just moved to Alberta, and so I wasn't really sure that almost everyone here is kind of from Alberta, so that's really excited to kind of know. And currently, I'm in Calgary. It's a great session. Really love the fact that Richard, you invited me. We just connected on LinkedIn, and I think was LinkedIn or
LinkedIn.
Instagram, and then you connected with me and you invited me. So I'm really happy to be here. The housing crisis that you are talking about, Shane, is really intense. I've experienced that firsthand because when we came, I moved from Montreal to here with my family. We have our own company, so basically we didn't really want to be stuck in any renting. We wanted to purchase right away because we sold our place in Montreal. But once we got here, it doesn't really stay on the market that long, and every single house that we have our eyes on, someone else gets their hands on it. So I see how quick the market is really kind of moving, like here in Alberta. In Quebec, it's a bit slower, but still there aren't a lot of apartments for other people to kind of stay in. So yeah, just that's what I wanted to add, but just wanted to share my gratitude for being here, and also the message from Charles I heard a bit as well, and great topic, and keep on inviting me. If I can join, I will.
For sure. We're gonna have the replay thing as well. There's a lot of information to unpack, many great, insightful guests. And yeah, we want to invite our guests for future sessions as well. Obviously, this is something, if everyone does go out and continue to share this, then we can have even larger audiences, because I think this kind of platform, and if you hear the information today, this is what we want to get out there. This is what we want to connect with people and continue to do. So, thank you to all of our hosts. Shane, if you have any final words, you could say them, and we'll finish off today's session.
Yep. No. Thanks for having me. Yep. If anyone wants to reach out, like I think someone said there, Instagram, I'm on there, pretty easy to get a hold of. So.
All right, great. Thank you everyone who's on the session. I know it was a lengthy one, but it was an informative one. So I appreciate you guys. Check for your emails. We're going to send the replays, report them out to your people. And then next month, we're going to be releasing a date that we're going to be doing this again. So yeah, I appreciate everyone. Go and invest. Yes, some links right there. We see all our speakers' links, and we see everyone's there, and we'll send that also in the replays. All right. So thank you, everyone. Have a great night. God bless.